So good morning, good afternoon, good evening, and welcome to the FOMC report special. We're getting ready now for the live broadcast and the live announcement coming up very, very shortly now, and we shall see. Now, looking at my portfolio, consistently beating the market, which is nice, and I'm beating Warren Buffett by quite a way. Warren Buffett is in blue, which is Berkshire Hathaway. The S&P is in pink and I am in green, which is nice. Okay, so I am beating the market. I'm beating Warren Buffett consistently. Overall, this happens, which is good, which makes me the greatest investor in the history of the world ever. Well, there you go. Not always. It's not always the case, but it's the case more often than not, which is very, very nice. Okay, no options trading. No margin, no contracts, just buying the companies, making relationships on the ground, finding the innovative stocks, finding the things that make money, and taking very, very small profits sometimes, even losing money sometimes to protect for a greater loss. Like yesterday, we got Rocket Labs as a swing from 40% swing from being down over 40%, and I sold at being down at 1%. I didn't make any money, but I did make money because I was minus 40 plus, I think 48, down to -1. That was in one of my best ever trades. So I corrected the situation and improved it. So even though people might say you didn't make any money, I certainly did make money. There we go. So, right, we're looking good. We're looking good. Now, if you've just tuned in, consider subscribing to the channel. If you've not yet subscribed to the channel, we're going to go in and out of membership chat today because I want to answer everyone's question. It's going to be very, very busy on the chat, so I do want to answer all my members' questions. We are going to get a big audience. I'm sure of that. We've already had a couple of hundred people through the channel and it hasn't started yet. So we are going to go over to members only. You can ask me directly questions. You can call in live to the show via Discord. I'm going to open up the broadcast lounge now on Discord. It's open. So if during the event you want to call in and speak, you can. If you want to access Discord, it's free, but you need to be a YouTube member to be able to phone in. You won't find the channel you need. Here is the link to becoming a member. You might need a browser to do so. So I'm in green, Warren Buffett is in blue, and the S&P is in pink. So looking good today, and it's not just on my main account. Actually, if I go over to both accounts, it's on my main account and it's on my Roth IRA as well. So overall, my balance is 53.7. We're coming up to very close to all-time highs. 58,000 is an all-time high, and I'm in a much better position than I was at 58,000. I have much, much lower positions. I have more cash. I have $1,000 in cash. I have 500 here, and I have, I've gone down now, 5, 6, 7, 740 or so, 740 plus about $4,000 worth of assets I could sell immediately on here that I'm looking to sell. So anyway, let's keep an eye. Philip McLean said you should add ARK. I don't know. Which one would you get? I don't know. I'm very happy with my portfolio right now. It's very balanced. But if you become a member and share me your links and interests and why I should buy it, and I'll look at it. But anyway, the broadcast lounge is open. If anybody pops on in, you can go in there and I will bring you into the show live. All right. Also, tap the like button, folks. We've got 51 watching and 21 likes. The reason for tapping the like button is if you tap the like, it shares it out to more people. More people get to vote on it, get to hear about us, and you'll be shown my content. If you don't like what I'm doing, that's absolutely fine. Please tap the down like button and you won't be shown any more of my content. It won't suggest to you anymore, and you'll watch what you want to watch. So everybody wins by you doing something. But do something. Don't just sit there and do nothing, okay? We've got 53 watching, 22 likes. Let's see if we can get up to 50. That would be amazing. Let's have a look. Got a few comments here. Let me bring everything up to date. Feel like Hood going to do well either way in this. Hood will absolutely do well either way. You're right. Big day, says Philip McLean. What's happening right now? When is the meeting? The announcement is in 25 minutes. You're going to get it live here on the show. I'm going to bring you the live announcement from Bloomberg, and then we are going to get the meeting after the initial reaction, the initial price, the rate. Of course, it's what Jerome Powell says. It's not the rate. It's what he says at the meeting, which drives the market one way or another. So you're going to get in just 24 minutes from now the rate, and then we're going to get the meeting right after that. See how you're doing, just to see how you doing. Just to see how you're doing against Kathy. Oh, I see. Oh, you want me to track it? Oh, I see. Oh, I'm way ahead. Way ahead of ARK, not even close. Really, I compare myself to the S&P and the best investor in the world, which is Warren Buffett. I'm way ahead of ARK Invest, like ridiculous amounts. So, yeah, way ahead. We can only do 3. Any more would look cluttered anyway. You must have gotten your SSI check this week, JP Rothschild. No idea what an SSI check is. No idea what that is, JP Rothschild. I don't know what you mean. You must have gotten your SSI check this week. No idea what that is. Social Security. I don't know what that is. No, I'm not due a check from anyone. Okay, let's have a look. Now then, SHOT. We bought SHOT this morning, and it's up. I'm up 1.32%. We just had a bit of fun with this one today because of our guest calling in. There's a video coming out about SHOT soon, but I need to look at the financials of it. Right, let's go through our positions. Charge point. That's going to be on the show tomorrow. Sitting here with a glass of wine, chilling out. Very nice indeed. Virgin Galactic, waiting for it to go down to 190. Berkshire Hathaway, I own Berkshire Hathaway. It's down today, but I'm waiting to buy it when it goes lower. ARM Holding, I will buy it at 20. It's way too expensive right now. I put a video out on IPO day and told everybody. Very few people paid any attention. They all bought it on the way up and said, "What are you doing? It's only worth $20. Don't be daft." And lo and behold, it's doing exactly what I said it would do. Anyway, some people, you just can't tell. They just get excited about stuff. I don't know why. There's no emotion here. Emotion towards you, my audience, but not emotions towards the stock. That's a silly thing to do. Palantir. Mullen, rubbish. Worst stock on the stock market. Doesn't deserve to be there. Gold. The S&P. Waiting to buy it, but not yet. Waiting to buy it back. Amazon. I started trimming yesterday. Apple. NextEra Energy. Getting closer to where I need it to be. About 15% to go, and I can start selling that. Enphase Energy. Getting better. My Roth position. Just a very small amount. Just 3 shares, which is $379. And I'll be selling that when I make about 5% profit on it. Okay. My long-term position is separate. Coca-Cola, very nice. Defensives going up. I lowered my average under $60 now. Much, much better position. Henrik, cheers for Denmark. Exciting day. It is. Henrik, welcome to you. Henrik is our Danish member. We have members in 41 countries around the world now. I'll read them out to you. These are our members you're seeing on the screen. Chile, USA, UK, Australia, Turkey, Italy, Ireland, Portugal, Uruguay, Canada, Uganda, Lebanon, Norway, South Africa, Argentina, Germany, Dominican Republic, Mexico, Denmark, Mauritius, Czech Republic, Lithuania, Romania, Morocco, Costa Rica, Bosnia-Herzegovina, Croatia, Israel, Netherlands, Rwanda, Palestine, Iran, Jamaica, Taiwan, South Korea, Ecuador, France, Russia, New Zealand, Georgia, and Iceland. We have members in all of those countries around the world. Yeah, it's pretty cool, right? Anyway, Jose, move over Warren Buffett. In 10 years, I will be the greatest investor alive. Move over Warren Buffett. In 10 years, I will be the greatest investor alive, says Jose. Congratulations to you on that prediction. I like it. I like the optimism. You go for it, mate. Very, very good indeed. Okay, let's carry on. J&J up 0.74. Kenview up. Chevron oil today is up again. Looking to sell my oil in just about 6-7% time. I can shift my oil and give myself some more capital to invest. There's our newest member. Iceland joined yesterday, followed Georgia and New Zealand just a few days ago. New Zealand, we had Russia, New Zealand, Georgia and Iceland. Our newest countries just got added, and very, very nice indeed. Thank you very much for being part of the family. Okay, very, very good. Not that long to go now, just a few minutes to go, and we'll be bringing you the live announcement. All here live on the show. Now, you have a choice. You can sit on the internet all by yourself and you could Google the rate. You could watch Bloomberg and you could watch the rate. You won't be able to get it. No one will talk to you. No one will address your conversations. We're here. Everyone gets a voice. Everyone gets to see everything. Plus, if you're watching on Bloomberg, you're going to get adverts and stuff like that. And I don't mean the adverts you get on YouTube. I mean the adverts in between the adverts. And also, you're only going to get it from their perspective. Well, here we answer everyone's questions. We're going to show Jerome Powell live, giving his meeting. We're going to get the figures. We're going to trade it. We're going to discuss it. You're going to get the best coverage here than you're going to get anywhere, because every time we do this, I learn from what you want, and you tell me what you want, and I bring more of it the next time. So hopefully the service and the what we're doing gets better and better and better all the time. Okay, that's the idea. McDonald's up but coming back. Google, we might get a slap on the face today of Google, and if we do, I'll be buying it, but only around about the 40% up for me. I'm 50% up when I sold it. I'll buy it at a 10% discount from where I sold it. Happy to do that, but that's it. Microsoft too expensive. Walmart defensive's going up. Tells you something. Tilray, I'll buy it around 230. That's it. Not a penny more. Robinhood, good. I'm up 12% on my main account and 19% on my Roth IRA. Holding that. Very, very good. I'm still green. We might turn red though. We're right on the line. We're getting a dip now before the bell goes. Before we get the rate. I will tell you, I'm still beating Warren Buffett by a long way, and I'm also beating the S&P. In fact, I'm the same as the S&P right now. But we are still green, just by the smallest amount. We could easily turn red in a few seconds. The studio will turn red with it if it does go red. Anyway, we'll see how it goes. And there we go. There we go. We're going to get volatility, folks. Get ready for that. Let's have a few comments here that just come in. They don't drink whiskey on Bloomberg either. Absolutely. They don't drink whiskey and fall on the floor and start dancing. You're absolutely right. They don't do that. Fed rate up. What do you mean the Fed rate's up? There's no announcement of the Fed rate. Sanko Nikolov. That's not true. I need to make sure that my audience don't get misled. The Fed rate is not up. That hasn't happened. It happens in 16 minutes live on my show. We'll announce it the second it is available, and it's not up at all. So that's not true. Greetings, friend. Nissan Napa. Greetings. Your music is a spreads love and unity. How do you see wars affecting markets, contrasting with market manipulation? Any insights on preventing worldwide conflict? My gosh, that's a big question. And of course, the moment the Ukraine war ends, we've got a 20% bounce in the markets. No question about that. And I said the war would end this year. I still believe the war will end this year. I think Russia now are losing by a long way. We've now got Ukraine soldiers in Crimea. and I don't think it's much longer to go now. But we'll get a 20% bounce on the market. I'm glad you enjoyed my music. That's very nice of you. For those of you who don't know what he was talking about, this is my music channel. I'm the World Piano Man. I do 14 voices, 7 different languages, and 650 songs. And every Friday night, it's Friday night is music night. There's my music channel. Go and check it out. Scroll down and you'll see all my latest videos. And I've just released a whole new bunch of videos doing the voices of Tom Jones, the Proclaimers, Willie Nelson, Sweet Caroline, Hello Again from Neil Diamond, Tears in Heaven, Eric Clapton's on tour again. Of course, Get Well, Steve Tyler, all of these videos. If you want to join me for Friday, on the homepage, look, upcoming live streams. Here is the Friday night is music night. I'm inviting you now to the concert. Tickets only. It's a free ticket, but you need this ticket anyway. There is the link. Click on the link in the chat right now, and it will take you there now. And then you'll have the concert live on Friday. You can phone in. Oh, green again. You can call into the show on Friday, and you can be part of the show on Friday. Phone in, and you can have a favorite song request, dedication, whatever you like. All right, I'm beating I'm beating Warren Buffett again and the S&P, which is good. Berkshire Hathaway is going down. I'll be buying some more Berkshire Hathaway shares when it goes down as well. The most expensive stock in the world, by the way, if you've not bought Berkshire Hathaway before. Okay. It's looking a banker for a pause. Buccaroony says Fed equals 0%. Thank you for your insights. I do the best I can. Switzer, wait, what? There is no land gained in Crimea by Ukraine. Ukraine is launching... No, that's not right, Switzer. There are soldiers in Crimea, and they have taken some land in Crimea. Absolutely, 100% special services are in Crimea at the moment. So they do have areas that they are occupying in Crimea, 100%. I follow it all the time, and I speak to people from Ukraine. I've had people phone into my show from Ukraine, remember? We've had that live on the show. I have some cash to buy. I'm new to this rate-changing trading. Split the cash and buy some now and some after. Well, you already need to be in on your positions right now. I wouldn't react. I'd be proactive. If you react, you'll always make the wrong decision because the markets will manipulate you to do the wrong thing. Wow, I'm up 4% now on my safety shot today. I only bought a very, very small amount purely for entertainment purposes. And you can see I've made a very, very small purchase, a very, very small purchase indeed. But as you can see, it's going up very much at the moment. It's on a real positive trend. I only have a very, very small amount. I mean, literally $15 worth. But I'm up 3 1/3%, so very nice indeed. Always like making money, no matter how small it is. Remember, a lot of people often say to me, "Why do you bother making such small profits?" Well, you can see the reason. Warren Buffett's in third place, the S&P's in second, and I am beating all three at the moment, anyway, at least, which is most of the time, because when I went on cruise ships for 4 years, I used to stay behind and play in the piano bar and get $1 tips over and over again, and I bought my house. When everybody else was smoking and drinking it on the beach, I was buying my house. So making $1 profit is everything. My portfolio started at $5,000 2 years ago, and now the overall balance is $53,587. Money makes money. Don't use margin. I just use my own money, and that's it. Don't even do contracts or options or any of it. Red again. We're going to go backwards and forwards between red and green. I shouldn't even bother, really. I'll leave it green for a little bit. Right. We got some good news. We've got Sensei Crypto live in the chat with us. Cash is king to a degree, but you can always make cash. If you're up 30, 40% on the stock in your Roth IRA and you want to get out, you can always take profits. I'm not a great believer in just holding cash all, I don't think that's necessary. Money needs to be working. It's not working. It's losing money by sat in cash doing nothing. If it's earning uninvested cash, like in Robinhood, it's earning 4.9%, then that's great. But if it's sitting doing nothing, it's not doing anything. I've got lots of stocks that are 30, 40% up, and I can sell them in 1 second and provide myself with liquidity to buy something else or use it to whatever. So I don't agree that cash just sitting around doing nothing, it doesn't do anything. So I'm not a believer in that. Sensei believes that. That's not really not my theory. I like money to be working one way or another. But isn't it a two-edged sword to celebrate such things because it could lead to escalation? But isn't it a two-edged sword to celebrate such things? No, I want the war to end. The only way the war's going to end is Russia lose. Russia isn't going to give up, and Ukraine isn't going to give up. So you've got to, unfortunately, that's the way it is. Whether we like it or whether we don't, that's the facts. One side has to lose. Of course, everybody loses because everyone's destroying the country and everyone's losing lives. However, we have to end the war, and the war is not going to be ended by anyone just giving up. So it's not great. I don't think the war will escalate. We're not going to get Third World War, and I've explained why many times. World War I and World War II are not a sequel. It's not a guaranteed thing. And World War III is very, very different. And I've explained the politics and the macro conditions around World War I and World War II. We cannot have a World War III. The environment is more likely to destroy humans than World War III. The conditions are very, very different. There's no point. There's no sense. It can't happen. Now you might say, well, of course it can happen. Someone can press a button. It's not going to happen. I'm in no doubt that World War III is not at risk here. They should have talks and make peace deal, lose a bit of land, and is better than World War III. There's not going to be World War III, but that's just my uneducated opinion. I agree they should just agree, but they won't. People don't. Human beings don't. Look at the clowns that come on my show this morning, the people that try to, troll the account, try to, destroy the show all the time. People are... some people aren't very nice. They're not very smart. They're not intelligent. They're not understanding or giving. They're very stupid. And sadly, that's the way the world is. We can't do anything about that. That's just how it is. Sensei, I'll wait for a bit. Would like to get more Apple and finally get into Tesla. Yes, but would you do if stocks all dropped? What do you do if stocks drop 20%? That's very, very easy. I know exactly what I would do if stocks drop 20%, like COVID times. If stocks drop 20% in a second, and now everything is now down. If that's what happened, first of all, it wouldn't happen in 1 second. There would be conditions which would take it to 20%. But if it did, assuming it would go down 20% in 1 second, which it can't, but let's say it did. I've got a balanced portfolio. I've got defensive stocks. My portfolio isn't going to go down 20% in 1 second. If it did go down 20% in 1 second, what would I do? Absolutely nothing until I knew it was going to go down another 20%. Because if it went down 20% and I had a reason to believe it was going to go down another 20%, this is exactly what I would do. I would sell at 20% down, wait for another 20% drop and buy it back in again. And I would be in a better position than I was when I was 20% up. Because now I've got more stocks because I was able to buy with a 20% discount from the already 20% down, and I would just remain at that position. So that's what I would do. Reality, though, that's not going to happen. So if we do get a decline steadily, and I don't know it's going to continue going down, I will continue working on YouTube, building up my channel, earning more money. The biggest investment you make is yourself, and I will hold my positions, find discounts within what the stocks I already have, and with my own investment in myself, doing my show on YouTube, earn more money and invest it, and then lower those averages and just stay in and bring those stocks down anyway. So, I'm long term, I'm not going to lose. Not going to lose. So, I'm absolutely not going to lose long term. I'm absolutely confident of that. No doubt about it. Where do you get the money from? Cash should always be part of someone's portfolio, especially when you can earn 5%. Correct. And it's why I have money in cash, about $1,000 right now, and I have about $5,000 of stocks that I don't want to hold, that are all up, and I could sell them now in 5 seconds. Even if I sold them for a slight loss, it wouldn't matter to me. I can do that. But how would I earn money? I would earn it. I would earn it the old-fashioned way. I don't see the stock market as a way to fix a broken system. My system is me going to work, earning money to invest. The golden rule is this: the rich invest, spend what's left. The poor spend, invest what's left. I would rather eat bread and cheese and water out of the tap and keep investing than to spend everything and only have $1 left to invest. I would rather keep investing and saving and eat less and do less. That's what I would do. So I will always make sure that I don't end up in any debt. I don't owe any money. I'm not borrowing any money. I own my house, I don't have a car loan, none of that stuff, because I did that first. You don't use the stock market to fix the problem. If the stock market goes down, you invest in yourself, you earn money the old-fashioned way. Go to McDonald's. Go to McDonald's, earn $10 an hour. Don't care what you do, earn some money, live within your means, invest what you have, and spend the rest. If you do that, you'll always end up with money. But it's hard. It takes discipline. It takes structure. It's hard, because you want to go out and treat yourself. You're feeling down, so you go out and buy yourself a beer or a McDonald's. If you can't afford it, don't do it. I only use my credit card to earn my cash back. If I haven't got the money in the bank, I don't buy it. I just don't buy it. That's it. The US wants the war to continue as weapon companies are making a fortune. The military-industrial complex is working well. I don't see the military making that much money on it right now. I've been investing in Lockheed. It didn't make me any money. So I'm not so sure about that. I think the money will be made after the war when the reconstruction starts, and America, the countries that assisted the most, will get the contracts to rebuild the country. So the builders, the construction workers, those businesses, loads of money down the line coming for construction who get the contracts into Ukraine. Absolutely. But right now it's costing the world money. I'm a bull market. I like to put my full clip into the market, to be honest. I think you should. That's my philosophy anyway. Have you spoken to anyone you know from Virgin Galactic? I speak to people at Virgin Galactic daily via private conversations on X and Instagram and stuff like that. Yeah, all the time. Didn't say 1 second. What are you buying with? I answered all of that. Everything in your portfolio drops at least 15%. His 60 new members. There you go. That's where the money's coming from. Sensei, I've got 60 new members. There you go. You have 1 week to take up the opportunity, like the trade yesterday. Exactly. That's about right. I agree with that. That's quite risky, Martyn. What if you sell and it rallies? You'd be caught out of your stocks at a loss. When I said if it was down 20%, I only said to you I would sell at a loss if I knew it was going down another 20%. I didn't say I would do that. I'd have to know, and nobody knows. That's very difficult to say. However, if we've got, when we had the depression, when we had the market crash 2008, the signs were all there, and it was a steady drop, and we knew it was going a long way down. That's why everyone kept selling. So there are signs, there are indicators. Here we go. We've got the rate coming. I can't believe I've been talking and not paying attention. Oh, my God. Here we go. I Can't believe this.
China was reopening. Are they headwinds now at the back end of 2023? Most people would assume they are.
What they are, and this goes to data dependency.
Here we go.
There's something that's happened in the last 14 days. Maybe it's 20 days. I'm not keeping that count. But this
Fed
surge
rate
that we've seen in oil with Javier Blas looking
What's it going to be?
light near $100.
He's getting serious. He's got his gold tie on and he's taking his glasses off.
48 hours ago.
It's got to be serious.
That's new, and that's
Here we
new
go.
for the people. The Eccles building, they are data dependent, but it's just not economic moment.
Here it comes.
It's what's going on.
Here comes the rate.
Including China.
Neil Dutta of Renaissance Macro wants the last word going into the Fed decision.
He's one of our best guests.
Dutta writes in, this is wish casting from the Fed. They are wish casting a soft landing, but the reality of 2023 is that we have not landed at all. We're running at an above trend cruising speed. We'll get the forecast from the Federal Reserve in about 20 seconds time alongside that Fed decision. Going into it, the price action looks like this.
The markets are dropping.
Positive by 0.2%. On the NASDAQ, almost totally
Here we go.
unchanged.
Are you
The
ready
bond
for this?
market, yields on a 2-year shaping up as follows. Near.
Is it going to be a pause?
5% on a 2-year in America, 5.05%.
I say
McKee
pause.
has the decision.
This is the very definition of a unanimous hawkish pause. The Fed leaves rates today in the range of 5.25% to 5.5%, while saying growth is solid and inflation elevated. So higher for longer. Policymakers leave another rate move on the table for this year and take 2 reductions off the table for the next 2 years.
There we go. Exactly what I said. A pause for longer. There we go.
Additional policy firming that may be appropriate.
We've got a pause.
And the dot plot shows that 12 members of the Open Market Committee still believes they will raise rates by another 25 basis points this year.
Right. Okay, now let me cover all this. We're going to what's important is when Jerome Powell speaks. This is not the important part. It's what Jerome Powell speaks. So get ready to make your trades and make your money. Now, let me tell you, that's exactly what I said. A pause and a pause for longer. We've not had a massive drop. As you can see, I'm still beating Jerome Powell and, Warren Buffett. I'm still beating that, and I'm still beating the market as well. So, in fact, I'm the same as the market. I'm just beating Warren Buffett. Okay, so we're all good. This is exactly what we expected. It's priced in, not a massive move. Now, the Fed have said they're not taking it off the table. That's what they have to say. If they said it's off the table, people would get carried away and it would pump. However, everybody knows that, so I think we're going to get a green day. We're going to get a green day, but there will be some opportunity now to make some money. I do think 100% I was dead right. I said it would be a pause. It should have been a pause last time. But guys, this is the very first time we have had a pause. We had a skip last time. The previous, before that, then it was a hike last time. We've had a skip. This is the very first time we have had a pause. This is very, very bullish. This is good. Now, they're going to say we're going to keep the rates for longer because they have to scare people. They have to make people think, okay, we can't buy. We can't get too excited. This is good news. Good news. Fantastic. It means we're going to get a pause. We're going to keep the rates for longer. There's going to be opportunity now. Let's go for our positions. What can I get? So we've got charge point going down. We've got Virgin Galactic. I'm going to buy it at 180. This is good. It tells Virgin Galactic what their costs are going to be. I don't think, and there's no need to raise rates. That is just political speech. They won't raise rates. We've paused. We'll hold and we'll hold and we'll hold until things come down. And oil will come down. In the UK today, inflation is falling faster than anticipated. It will. The next meeting will be a pause again, and then in the new year, we'll see rates coming down from about spring. This gives us stability. This gives us confidence. This is a great, great outcome. It's exactly what I said was going to happen, and I'm really happy. So before we carry on, we've got Jerome Powell taking the stage in a few minutes. You need to do something very, very important. Let's bring in the funky music. We've got 80 people watching, 79 people watching. We need every single person smash the like button. Why? Because if you tap the like button, it will share it out to more people. Only 33 likes. 99.5% of my viewers hit the up like. the reason why it's not only 33 is most people are lazy and they don't do anything, or they're not logged in. That's just a reality of YouTube. So I'd like to get 87. I'd like to get 45 would be 50%. If everyone can tap the like button, what that will do is it will share this video to more people, and you'll be suggested my content in the future. If, however, you don't like my content, you think it's rubbish, tap the down like button and you'll never be shown my content again. You'll never see it again. YouTube will not suggest my content to you again, which is good for you, right? Because you'll find what you want to see. You don't like me, I might not like you. I don't mind. I don't mind encouraging people to tap the down like. Do something. Don't just sit there. 80, that would be 40, would be 50%. We got 48, 49. That's better than I deserve. Thank you very much indeed, everyone that took the time to do that. Thank you ever so much for all doing that. All right, moving on. Let's go back to our positions. It's great news. Is a pause good? It's very good. Martin, do you remember Barings Bank? I met the guy who lost them 800 million and bankrupted the bank the other day. Interesting guy. I do remember that story. Yes, I do. Let me go for the comments here. Rob, lovely to have you here. He had Ewan McGregor play him the rogue trade in the film The Rogue Trader. Nick Leeson, wasn't it? You shouldn't give in to Putin, a bully. You give in, you get a bloody nose. Not talking about you making money over a month. I'm talking about a crash that lasts 2 weeks. You only get paid once a month. You can just start working more then. It's too late to take the opportunity. It's never too late to take the opportunity. I'll always find a way to make some money. Stephen Lewandowski, what was the ticker on the drinking alcohol to sugar? This one, we're going to have a video coming out soon. Safety shot. Safety shot. I was up about 5% a few moments ago on the first day of owning it. Anyway, fingers crossed, people. It's good news. I'm the same way, Martin. Self-employed, trying to live below my means, except for a treat every now and then. Spot on, mate. Spot on. You can't just see a crash and say, I'm going to start working at McDonald's and make some money to invest. Yes, you can. Will take too long and miss. No, don't. I never see the negative. You're not going to get me, Sensei. I'm not going to see it's not possible. I do think you need cash, but I've got cash in stocks. I can sell loads of things and free up money all over the place. I am not at all concerned. Virgin Galactic, not cheap enough yet. Rocket Lab, this is good news for everyone. Jerome Powell speaks in 20 minutes. We'll be live for Jerome Powell. I find it difficult to find a job alongside my study, so I use my free monthly student grants. You use your student grants to invest in the stock market. I'm not sure that's the best idea, Niels. Is that really the best idea? I don't know. Do you still have the credits from this morning? Do I still have the credits from this morning? No, they rolled this morning. What do you mean, do I have the credits from this morning? Recent events. Yeah, I do probably. Yeah, look, there you go. I do. Yes, I do. There you go. I can run them again. What's the point though? Yes, I can run them. I can run them again. I'm not sure the point though, because it would confuse people. I don't want people thinking that people are donating tips again. So see, I'm not sure that's a good idea to rerun all of those anyway. But yes, I do. That's what I just did there. What if you wait for a crash, but it doesn't come? Are you going to pay higher prices? Right. What we got now is what happened this morning. Neil said, have I got the credits from this morning? And I don't think I can stop it now. But there you go. We might get a few. These are from this morning. These are from this morning, if you missed it. If you missed it this morning, we had like 50 memberships. It's like the most incredible day. So these aren't real. These are real, but these are members from this morning. I was asked just to replay it. All right? Okay. Fatso talks. Breaking. Jerome Powell, the Fed rates unchanged. Yes, we will cover the live meeting in a moment. Hasn't happened yet. When we get the live meeting, it'll be in 20 minutes. These are members from the morning. We're just replaying it. 100% pause. Yep. Unchanged. Yep. Great news. It is great news. Yes, yes, yes. It is great news. We're looking for opportunity now. The markets isn't moving very much. It's good. It's the first pause we've had. These are members from this morning, folks. They are not new members. They are ones from this morning. Is a pause good? Ramen, yes, it is. From here only gets better. Zach say yes. Bad news because more interest rates later this year. No, there won't be more rates. They absolutely will not be more rates. I was sure about the pause, and I'm sure that there won't be rates. I am sure about that. Okay. Here is here's the markets. I'm still beating the market. Look, Warren Buffett is down. The S&P is down, and I'm down less than all three. So I'm still beating the market, even though it's going down. This is what we get now, a sell-off because people can buy back, ready for the good news, okay? It's what he says, and we know what he's going to say. These new members that are coming in were from this morning. We're just replaying it for Niels, he missed it. Depends what Powell says, correct. Bad news, more interest, no. Did I miss anything, Steve? No. Virgin Galactic is down a bit. Yes, it is, but that's good. Good. Nick Leeson, there you go. Okay, I just got here. How's everyone, Mike? How you doing? Safety shot ticker. Ticker is shot. S-H-O-T. S-H-O-T. I missed it. We're just playing for our members the explosion of memberships this morning. I don't know how to stop it. I replayed it for Niels. It was a request. No, not replay it. No, I can't do anything about it now. It started. It started. I don't know how to stop it. It was your bloody fault. I don't know why you asked me anyway. That's rather depressing. Test it 274, then straight back down. It's not at all. It's not depressing. It's not depressing. It'll go back up again now. It's people took profit. That's all. People bought it in mass. It went up. They took profit. That's what whales do. What you're supposed to do is already be in, not react to that, hold that. When it drops back down, buy some more, but don't buy it on the way up. All right? Sorry, folks, about this. I don't know how to stop it. It's Niels' fault. I was joking about this. Oh, thank God for that. I'm glad you were joking about that. As a new day trader, I'm a little down, but soon will be a sub. JC Heal, don't you worry about that. Don't you worry. We're here to help everybody. We are here. We are here to help everyone. We have cash giveaways. Still beating the market and Warren Buffett. We got 15 minutes to go. Majority of members believe highest interest rates for a long time. Some forecasts get one more hike, 6%. 6%. No, we won't get it. Sorry, yeah, Niels. It's Niels' fault. It can't go on forever. Yeah, well, these are all the members I got this morning on the show, and yeah. Oh, dear God. Anyway, it is what it is. It is what it is. I don't know how to stop it, honestly. I don't have a clue. I'm just going to have to wait. All right? You just have to live with it. It is what it is. Yeah. I'm not playing it. It's already started playing. We had this crazy moment this morning, and we had the record number of members become a member, and it's in the memory, and it's just running through. I can't do nothing about it, I'm afraid. Charge point. It'll be over in a minute, folks. It'll be over in a minute. Berkshire Hathaway going back up. Sorry, folks. ARM, Palantir, Mullen, scam, awful, rubbish, S&P, No, not there. This is a man from Earth.
I want to give away some vacation incentives to you and the members today. Can we make it happen?
Yes, we can. He sent me a message through Facebook. A man from Earth. I need to talk to you about that. It'll be over in about half an hour.
I want to give away some vacation incentives to you and the members today.
Oh, God.
Can we make it happen?
Well, if it doesn't stop before Jerome Powell speaks, I will, I don't know, pull the plug. Don't quite know how I'll pull the plug on it, but I will find a way. I don't know, just turn my computer off. Anyway, Tesla, Rivian. Has it ended? I think it's ended. Warren Buffett's dad, buy more Berkshire Hathaway. Well, it's funny you mentioned that, actually. I was just looking at it right now to buy some more. I always buy it. I'm going to buy it now every time it goes lower. But it's nothing at the moment. Where am I buying this? Am I buying it on my Roth IRA? No, I'm buying it in my long-term position. Okay. Let me buy some more Berkshire Hathaway. Here we go. If we can get a discount here. Okay. My limit price is 559,800. So here we go. I'm going to buy some more Berkshire Hathaway. Buy a limit order of so 559,000. 800. There we go. 559,887 is my average. 800. So I'm going to drive it down by 87. Continue. Market hours. Yeah. I'm going to buy some more Berkshire Hathaway. And this time I'm going to buy another. I'm going to buy a number of shares. You can't do a limit order unless it's on. You only buy it in dollars. You only buy it in dollars. Okay. I forgot about that. $100. I'm going to buy $100 this time. Okay. We'll wait for it to drop below. If it does, if it doesn't, I'll come back to that. I'll buy $100 this time and just lower my average. Okay. One more hike, yes, but there won't be. I don't believe that for a second. They were anticipating a rate hike, and we've got a pause. Exactly what I said. I don't believe we will. We don't need it. We just need to hold the rates up where they are. So I don't believe it for a second. All right. It's 10 minutes to go before Jerome Powell speaks. That's what's important. And we'll cover it live. You won't miss a thing. Charge Point, Virgin Galactic, Berkshire. Okay. I'll buy $100 of it when it goes down again. If it goes down, it might not. Palantir, Mullen. Who anticipated a hike? I didn't. I'll tell you that for nothing. How many people got it right? We've got 11 minutes ago. How many people got it right on my X account? Here we go. This is my X account. Now, if you've not voted on this poll, you don't need to vote now, of course, because the vote's finished. Well, it hasn't finished. Well, yeah, yes, it has. 52% of you got it right. Someone said cut. Don't know who that was. 12.5%. Skip, 7.5%. 27%. Now, this is my members. My members were with me on the pause. 52% of you. So, if you'd like to go and leave a comment to that, You can't vote now, but here's my X account. Go and leave a comment. Follow me on X, which is formerly Twitter, and I will reply to all of your comments, answer all your questions, and that's where you see me post my trades and my investments before I make them, before I buy them, and before I sell them. It looks like I got a couple of questions, do I? With likes, reposted. Thank you, Pablo, for reposting. There you go. I don't have any questions to answer right now. So there you go. Anyway, thank you for those of you that followed me on X. Today was a momentous day. We got through 1,000 followers today, 1,002 now. Cuts will start Q3 of 24. I think the spring, the summer, that's about right. Yeah. I don't think, Q3, yeah, the summer. Yeah. Anyway, why are we looking at that rubbish? We want to be looking at Berkshire Hathaway again, right? Here we go. Waiting to buy a bit more if this goes down. We've got rates now. This is good for the market. So I've got my finger on the button to swipe up another $100 worth of Berkshire. If we see it drop, I'll buy it very, very quickly. 10 minutes ago, before Jerome Powell speaks, we'll be cutting into that and we'll be listening to that whole broadcast. Who anticipated a hike 40% in August? TO pause will stagnate prices and the indexes will be range bound, said Warren Buffett. Will stagnate prices. Cuts will start in Q3. I'm looking to catch a falling knife on Nike in about 15 minutes. I'm not really a Nike investor. I don't see any point in that. Anyway, let's have a look. Waiting for a slight little downturn on Berkshire Hathaway, and I'll jump on in. In fact, what I'm going to do is we've got 9 minutes to go. Let's see if I can stick it up there. I can go through other positions and see where we are. Right, I'm going to keep my eye on another window. I've only got 16 screens in here. Okay. Thoughts on GME? I wouldn't touch it with a barge pole. Lucas Hexon. Wouldn't touch it at all. Rubbish stock. It's a gambling stock. It's a stock that's all over Reddit for people that don't read balance sheets and study it. Honestly, you ask me a question, I give you the honest answer. I wouldn't touch it if it fell out of the sky for free. It's rubbish. Apple. Next year, energy. Enphase. Hardly a reaction to it at all. It's what Jerome Powell says. And the markets will bounce around. They'll use it as a weapon to trade. 7 minutes to go for the live feed. Tesla. Rivian. Did Rocket Labs go where I wanted it? AMC, another one. Rubbish. AMC, rubbish. It's just people on Reddit gathering around in dark rooms, getting each other to buy it, then to dump it on each other. You all know how it works. That stuff is only for the benefit of those who run the YouTube channels, make the money out of it. Those that run the circles, they're there to just be greedy and take advantage of people. It's not true. It's not honest. It's terrible, terrible stuff. You'll never see me buy anything like that. That's not investing. That's a cult coming together to try to take advantage of people. And I find that stuff not good at all. So you won't find me buying anything like that. Right. Come on, Berkshire. Little tiny more. I've just bought more Berkshire Hathaway, and there you go. Now, my overall position, I am up. Okay, what did I buy it at? I just bought it, folks. I just bought it. So I bought some more Berkshire Hathaway. And I'm just going to buy it every time it goes lower. Every time I can buy it lower than my previous time, I'm going to buy it. That's my strategy. Let's see if I actually did that, because you can't set a limit order when you're not buying a full share. I bought it at 559. In fact, I just paid more for it. That's a bit annoying. That didn't go quite as well as planned. This is the problem with not being able to do a limit order. I might have to shift from this into my Roth IRA. No, hang on, that wouldn't work either. Yes, I might have to shift to Berkshire Hathaway B. Yes, BRKB, because it's enables you to set a limit order for one share, whereas this you can't. You can set a limit order for a whole share. Well, a whole share is $500,000. So even though that went down, it was in between, and as you can see, I ended up paying slightly more. It doesn't really matter, to be perfectly honest. It's a tiny bit, but that's not the idea. The idea is to get it cheaper each time. So I might have to move to BRKB and do it that way, to be honest. I don't think this is going to work so well for me. They're doing it this way. Yeah. 887, now 943. Yeah, I paid slightly more. Yeah, only the smallest amount, but it's because you can't set a limit order on a fractional share. You can only set a limit order on a whole share. So, on that basis, I mean, I'm still making money, it's fine, but I'm going to buy Berkshire Hathaway, I think, on a BRKB. Unless I don't care. If you basically have to wait for a bigger drop, and the trouble is you don't get bigger drops. If we look at it, how long have we got? 3 minutes to go. Okay, we're going to prepare now. If we look at this stock, this is a high plus 2.5. Yeah, see, there's only a 0.5% there. You don't get such big swings with this. It just keeps trending upwards. So you're not going to be able to trade it like that. Let's see, what was that? That was up 7%. There's a 5% swing there, but that took 6 days. So you're just not going to see volatility with it. So you're not going to be able to do that. So I might have to change that strategy. Anyway, whatever. Doesn't matter. I'm still up. I'm still making money on it. It doesn't matter. Mr. Bogues. Here he is. Great star this morning from our show. Right, we're going over to Jerome Powell now. It's time to get ready for a soft landing. We are ready. We're waiting. We've got 2 minutes to go. We're going to bring it to you live. We're doing well. We're doing well anyway. I think it's time to buy Berkshire Hathaway B, not A. But it's a long-term position. It's people that just want to buy and hold anyway. So it does give you that stability. That's the advantage, though, of buying A, because you can't do a limit order for a fractional share. Only the rich are buying it. It probably won't move. It'll just keep steadily going up. So on that basis, just wait for a little dip and add more over time. That's probably going to work. So I might consider that and just think stay where I am. Anyway, as you can see, I'm up on it. I've only just started buying it and I'm up. So it's not a major deal. Okay. All right. We're getting ready for Jerome Powell. We've got 1 minute to go. We're going to bring in the audio.
Where you are?
Yeah, so I've been saying that the whole time.
We are ready now.
Wants to listen to it, right? I think there's been this tendency to jump back into the pool because these, higher rates are going to evaporate. What the Fed has told you today, what the markets are finally starting to respond to, is that no, these rates are actually around here for a while. So. So I don't think there's any reason to rush. And so we like duration, but we wouldn't go hell's bells. Sorry.
And then let's fold this into Jim Bianco. I mean, John, it's just simple. Bianco was way
Just a
out
few
front
moments ago,
with
before
this
Jerome
idea of
Powell comes to the
defining
stage,
what
we'll bring it
longer
in.
looks like with a 10-year yield, and he's in the camp with Greg Peters.
Hey, Jim, this was great. Jim Bianco, together with Craig Peters. Thank you, guys. Going into this Federal Reserve news conference with Chairman Powell in about 90 seconds' time. I can tell you the 2-year, the high of the session, 514.80. We've backed away since then, Tom. We're up by 2 basis points to about 511.
Remember, the markets will be volatile when he speaks.
August 2007 is when the follies began, and there is a headline in the Bloomberg now of a 2-year yield back to 2006. Lapels were wider in 2006. John, I can honestly say, I guess I would, say historically, someday you're going to revisit 2006.
So I'll be buying stocks throughout this. I'll be taking some trades as well.
Again,
Let's get ready to go.
From the nominal yield that we're all living, what does this do to mortgages? And I'm going to go to the real yield analysis, printing 1.99 up to 2% right now.
We've spent 30 minutes or so, Tom, talking about these forecasts from the Federal Reserve. Any moment from now, Chairman Powell's going to walk into the room, stand behind that podium and deliver his statement and take some questions. On those forecasts, let's reflect on the Mike McKee question of the day. How much confidence do you have in anything that you were telling us today? Well, and Greg Peters said it. We're putting too much emphasis, Tom, on those forecasts from this Federal Reserve.
This is the Latin mumbo-jumbo of ex ante and ex post.
Rumble has gone green today.
Ex post, this much data dependent. I think we're going to hear that across 3 central bank meetings through the week here in London. These people are living ex post because of pandemic, because of a massive fiscal stimulus in the United States, not in every jurisdiction. A war.
Our portfolio is looking great. Here he is. Let's go.
The heart of the matter is we're ex post.
The Chairman Powell walks into the room of the Federal Reserve on the September decision.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, we're in a position to proceed carefully in determining the extent of additional policy firming that may be appropriate. Our decisions will be based on our ongoing assessments of the incoming data and the evolving outlook and risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace. And so far this year, growth in real GDP has come in above expectations. Recent readings on consumer spending have been particularly robust. Activity in the housing sector has picked up somewhat, though it remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In our Summary of Economic Projections, or SEP, committee participants revised up their assessments of real GDP growth, with the median for this year now at 2.1%. Participants expect growth to cool, with the median projection falling to 1.5% next year. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 150,000 jobs per month, a strong pace that is nevertheless well below that seen earlier in the year. The unemployment rate ticked up in August, but remains low at 3.8%. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises from 3.8% at the end of this year to 4.1% over the next 2 years. Inflation remains well above our longer run goal of 2%. Based on the Consumer Price Index, or CPI, and other data, we estimate that total PCE prices rose 3.4% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 3.9%. Inflation has moderated somewhat since the middle of last year, and longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Nevertheless, the process of getting inflation sustainably down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.3% this year, falls to 2.5% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points. We see the current stance of monetary policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses. In light of how far we have come in tightening policy, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving and sustaining a stance of monetary policy that is sufficiently restrictive to bring inflation down to our 2% goal over time. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 5.1% at the end of 2024, and 3.9% at the end of 2025. Compared with our June summary of economic projections, the median projection is unrevised for the end of this year, but has moved up by 0.5 percentage point at the end of the next 2 years. These projections, of course, are not a committee's decision or plan. If the economy does not evolve as projected, the path of policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. Given how far we have come, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks. Real interest rates now are well above mainstream estimates of the neutral policy rate, but we are mindful of the inherent uncertainties in precisely gauging the stance of policy. We're prepared to raise rates further if appropriate, and we intend to hold policy at a restrictive level until we're confident that inflation is moving down sustainably toward our objective. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you. Colby Smith with the Financial Times. What makes the committee inclined to think that the Fed funds rate at this level is not yet sufficiently restrictive, especially when officials are forecasting a slightly more benign inflation outlook for this year? There's noted uncertainty about policy lags. Headwinds have emerged from the looming government shutdown, the end of federal child care funding, resumption of student debt payments, things of that nature.
So I guess I would characterize the situation a little bit differently. So we decided to maintain the target range for the federal funds rate where it is at 5.25% to 5.5%, while continuing to reduce our securities holdings. And we say we're committed to achieving and sustaining a stance of monetary policy that's sufficiently restrictive to bring down inflation to 2% over time. We said that. But the fact that we decided to maintain the policy rate at this meeting doesn't mean that we've decided that we have or have not at this time reached that stance of monetary policy that we're seeking. If you looked at the SEP, as you obviously will have done, you will see that a majority of participants believe that it is more likely than not that it will be appropriate for us to raise rates one more time in the 2 remaining meetings this year. Others believe that we have already reached that. So it's something where we're not making a decision by deciding to about that question by deciding to just maintain the rate and await further data.
So right now, it's still an open question about sufficiently restrictive. You're not saying today that we've reached this level.
We're not saying, yeah, no. Clearly, what we decided to do is maintain the policy rate and await further data. We want to see convincing evidence, really, that we have reached the appropriate level, and you know we're seeing progress, and we welcome that. But you know, we need to see more progress before we'll be willing to reach that conclusion.
And just on the 2024 projections, what's behind that shallower path for interest rate cuts and the need for real rates to be 50 basis points higher?
Right. So I would say it this way. First of all, real interest rates are positive now. They're meaningfully positive. And that's a good thing. We need policy to be restrictive so that we can get inflation down to target, okay? And we're going to need that to remain to be the case for some time. So I think, remember that of course, the SEP is not a plan that is negotiated or discussed really as a plan. It's accumulation, really, and what you see are the medians. It's accumulation of individual forecasts from 19 people, and then what you're seeing are the medians. So I wouldn't want to, bestow upon it the idea that it's really a plan. But what it reflects, though, is that economic activity has been stronger than we expected, stronger than I think everyone expected. And so what you're seeing is this is what people believe as of now will be appropriate to achieve what we're looking to achieve, which is progress toward our inflation goal, as you see in the SEP.
Thanks. Let's go to Rachel.
Hi, Chair Powell. Rachel Siegel from The Washington Post. Thanks for taking our questions. How would you characterize the debate around another hike or holding steady? Is it discussion around lag times, fear of too much slowing, too little slowing? Could you walk us through what this disagreement was about at the meeting?
Yeah, so the proposal at the meeting was to maintain our current policy stance. And I think there was obviously unanimous support for that. But this, of course, is an SEP meeting, and so people write down what they think. And you have some, you saw, I think 7 wrote down no hike at this meeting, or between now and the end of the year, and I think 12 wrote down another single hike in one of the next 2 meetings that we have between the end of the year. So it wasn't like we were arguing over that. People just stating their positions. And really what people are saying is, let's see how the data come in. We want to see, what we want to see. We want to see that that these good inflation readings that we've been seeing for the last 3 months, we want to see that it's more than just 3 months, right? We want to see, the labor market report that we received, the last one that we received, was a good example of what we do want to see. It was a combination of across a broad range of indicators, continuing rebalancing of the labor market. So those are the two things. Those are our two mandate variables, and that's the progress that we want to see. But I think people, they want to be convinced. They want to be careful not to jump to a conclusion really one way or the other, but just be convinced that the data, support that conclusion. And that's why, given how far we've come and how quickly we've come, we're actually in a position to be able to proceed carefully as we assess the incoming data and the evolving outlooks and risks and make these decisions meeting by meeting.
I see. And in your view, I know nothing has been decided yet, but what would one more hike at the end of the year do to the economy or to inflation? And on the other side, what would no hike do, if you could sort of game that out for us?
So, you can make the argument that one hike one way or the other won't matter, but for us, we're trying, obviously as a group, it's a pretty tight cluster of where we think that policy stance might be, but we're always going to be learning from data. We've learned all through the course of the last year that actually we needed to go further than we had thought. If you go back a year and what we wrote down, it's actually gotten higher and higher. So we don't really know and that's why, again, we're in a position to proceed carefully at this point. A year ago, we proceeded pretty quickly to get rates up. Now we're fairly close, we think, to where we need to get. It's just a question of reaching the right stance. I wouldn't attribute huge importance to one hike in macroeconomic terms. Nonetheless, we need to get to a place where we're confident that we have a stance that will bring inflation down to 2% over time. That's what we need to get to, and we've been moving toward it. As we've gotten closer to it, we've slowed the pace at which we've moved. I think that was appropriate, and now that we're getting closer, we have the ability to proceed carefully.
Thanks. Let's go to Steve.
Steve Leisman, CNBC. Mr. Chairman, I want to return to Colby's question here. What is it saying about the committee's view of the inflation dynamic in the economy that you achieve the same forecast inflation rate for next year, but need another 0.5 point of the funds rate on it? Does it tell us that the committee believes inflation to be more persistent, requires more medicine effectively? And I guess a related question is, if you're going to project a funds rate above the longer run rate for 4 years in a row, at what point do we start to think, hey, maybe the longer rate or the neutral rate is actually higher? Thank you.
So I guess I would point more to, rather than pointing to a sense of inflation having become more persistent, I wouldn't think that's not, we've seen inflation be more persistent over the course of the past year, but I wouldn't say that's something that's appeared in the recent data. It's more about stronger economic activity, I would say. So if I had to attribute one thing, again, we're picking medians here and trying to attribute one explanation, but I think broadly, stronger economic activity means rates, we have to do more with rates, and that's what that meaning is telling you. In terms of what the neutral rate can be, we know it by its works. We only know it by its works, really. We can't the models and that we use, ultimately you only know when you get there, and by the way the economy reacts. And again, that's another reason why we're moving carefully now, because there are lags here. So it may of course be that the neutral rate has risen. You do see people. You don't see the median moving, but you do see people raising their estimates of the neutral rate, and it's certainly plausible that the neutral rate is higher than the longer run rate. Remember, what we write down in the SEP is the longer run rate. It is certainly possible that that the neutral rate at this moment is higher than that, and that's part of the explanation for why the economy has been more resilient than expected.
Let's go to Howard.
Howard Schneider with Reuters. Thank you. So you've said several times that the economy needed a period of below-trend growth to get inflation consistently back to 2%. You kind of get that in 2024, a little bit. 1.5% is just a touch below what's the estimate of potential. So the fact that you're getting so much done at so much less cost, does that represent a change in how you think inflation works, a change in how you think the economy works, a change in the mix of supply healing versus demand destruction that's necessary to achieve this?
Yes, of course, it is a good thing that we've seen now meaningful rebalancing in the labor market without an increase in unemployment, and that's because we're seeing that rebalancing in other places, in, for example, job openings, and in the jobs worker gap. You're also seeing supply side things, so that's happening. I would say, though, I still think, and I think broadly people still think that there'll have to be some softening in the labor market. That can come through more supply, as we've seen as well. Also, remember, the natural rate we think is coming down, which is a supply side thing, so that the gap between any given unemployment rate that's lower than that and the natural rate comes down. That's a way for supplies. That's a way for the labor market to achieve a better balance. So all of those things are happening. You're right. In the median forecast, we don't see a big increase in unemployment. We do see an increase, and but that really is just playing forward the trends that we've been seeing. That is not guaranteed. There may come a time when unemployment goes up more than that, but that's really what we've been seeing, is progress without higher unemployment for now.
So just to boil that down for a second, we've gone from a very narrow path to a soft landing to something different. Would you call the soft landing now a baseline expectation?
No. I would not do that. I would just say, what would I say about that? I've always thought that the soft landing was a plausible outcome, that there was a path, really, to a soft landing. I've thought that, and I've said that since we lifted off. It's also possible that the path is narrowed and it's widened, apparently. Ultimately, this may be decided by factors that are outside our control at the end of the day. But I do think it's possible, and I also think. This is why we're in a position to move carefully again, that we will restore price stability. We know that we have to do that, and we know the public depends on us doing that, and we know that we have to do it so that we can achieve the kind of labor market that we all want to achieve, which is an extended period, sustained period of strong labor market conditions that benefit all. We know that. The fact that we've come this far lets us really proceed carefully, as I keep saying. So I think, that's the end we're trying to achieve. I wouldn't want to handicap the likelihood of it, though. It's not up to me to do that.
Thank you.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, both you and Vice Chair Williams have indicated that sufficiently restrictive will be judged on a real rather than nominal basis, implying some scope for nominal rate cuts next year, provided further compelling evidence that price pressures will continue to subside. Is the FOMC focused on targeting a real level of policy restriction? And can you explain what would constitute enough evidence that will allow the FOMC to normalize the nominal stance of policy while keeping real policy settings sufficiently restrictive?
I mean, yes, we understand that it's a real rate that will matter and that it needs to be sufficiently restrictive. And again, I would say you know sufficiently restrictive only when you see it. It's not something you can arrive at with confidence in a model or in various estimates. And so what are we seeing? We're seeing, through a combination of the unwinding of the pandemic-related demand and supply distortions and monetary policy's work in suppressing demand or alleviating very high demand. The combination of those two things is actually working. You're seeing, inflation coming down. It's principally now in goods, also in housing services. You begin to see effects of it in non-housing services as well. So we think that is working. And I think what, as we've said, we want to reach that. We want to reach something that we're confident it gets us to that level. And I think confidence comes from seeing, enough data that you feel like, yes, okay, this feels like we can for now decide that this is the right level and just agree to stay here. We're not permanently deciding not to go higher, but we would, let's say, if we get to that level. And then the question is, how long do you stay at that level? And that's a whole other set of questions. For now, the question is trying to find that level where we think we can stay there. And we haven't gotten to a point of confidence about that yet. That's the stage we're at, though.
But it looks like because there was an across-the-board drop in the core PCE projection, core PCE inflation projection for this year, and even then it seems possible the core PCE inflation could come in even lower than the median at 3.7%. Would you see a case to raise rates still if it turned out that you were going to achieve the same real rate this year because the decline in inflation proceeds somewhat better than you currently anticipate?
The decision that we make at each meeting, and certainly at the last two meetings this year, it's going to depend on the totality of all the data. So the inflation data, the labor market data, the growth data, the balance of risks and the other events that are happening out there. We take all of that into account. So I can't really answer a hypothetical about one piece of that. It'll be trying to reach a judgment over whether we should move forward with another rate hike overall, and whether that would increase our confidence that yes, this is an appropriate move, and it will help us be more confident that we've gotten to the level that we need to get to.
Gina.
Thanks, Chair Powell. Following up on Nick's question, actually, John Williams, the New York Fed president, obviously, has said things to the effect of next year, as we see inflation, kind of, again, to Nick's point, as we see inflation coming down, we're going to need to reduce interest rates to make sure that we're not squeezing the economy harder and harder over time. And I wonder if that's basically the logic that you apply. Is that how you think about it? And then I also wonder, in the last press conference, you said something to the effect of, it's a full year out, those discussions, and people interpreted that to mean that you didn't see a possibility of a rate cut in the first half of next year. And I wonder if that was what you meant by that, or whether, how you're thinking about that timing.
No, when I answer these questions about hypotheticals about cutting, I'm never intending to send a signal about timing. I'm just answering them as the question is expressed. So please, I wouldn't want to be taken that way. Sorry, the first question was that how? Yeah. So we're as we go into next year, that's the question we'll be asking is taking into account lags and everything else we know about the economy and everything we know about monetary policy. The time will come at some point, and I'm not saying when, that it's appropriate to cut. Part of that may be that real rates are rising because inflation is coming down. Part of it just may be that it'll be all the factors that we see in the economy. And, that time will certainly come at some point. And what you see is us writing down, a year ahead estimates of what that might be. And, there's so much uncertainty around that. When in the moment, we'll do what we think makes sense. No one will look back at this and say, hey, we made a plan. It's not like that at all. These are estimates made a year in advance that are highly uncertain, and that's how it is.
Neil.
Thanks so much, Chair Powell. Neil Irwin with Axios. I wonder, how do you think about the question of whether the strong GDP growth we've been seeing is driven by excess demand versus supply-side factors, productivity, labor force growth? And relatedly, if GDP keeps coming in hot, even in the absence of inflation resurgence, would that on its own be a reason to consider more tightening?
So on your first question, we're looking at GDP very, very carefully to try to understand really what's the direction of it, what's driving it, and it's a lot of consumer spending. The consumer's been very robust in spending. So that is. That's how we're looking at it. Sorry, your second question was?
There's GDP stays hot, but without inflation.
So I think the question will be, GDP is not a mandate, right? Maximum employment and price stability are the mandates. The question will be, is GDP, is the heat that we see in GDP, is it really a threat to our ability to get back to 2% inflation? That's going to be the question. It's not a question about GDP on its own. you're expecting to see this improvement, continued rebalancing in the labor market and inflation moving back down to 2% in a sustainable way. We have to have confidence in that, and we'd be looking at GDP just to the extent that it threatens one or both of those.
Victoria.
Hi, Victoria Guida with Politico. There are multiple external factors that are playing out right now. We see rising oil prices. We see auto workers striking. There's the looming, very real possibility of a government shutdown. And I was just wondering, for each of those things, could you talk about how you're thinking about how that might affect the course for the Fed and the economy?
So there is a long list, and you hit some of them. But it's the strike, it's the government shutdown, resumption of student loan payments, higher long-term rates, oil price shock. There are a lot of things that you can look at. So what we try to do is assess all of them and handicap all of them. And ultimately, though, there's so much uncertainty around these things. I mean, to start with the strike, first of all, we absolutely don't comment on the strike, as we have no view on the strike one way or the other, but we do have to make an assessment of its economic effects to do our jobs. So, the thing about it is so uncertain. It will depend. The economic effects, it could affect, we've looked back at history, it could affect economic output, hiring, and inflation. But that's really going to depend on how broad it is and how long it's sustained for. And then it also depends on how quickly production can make up for lost production. So none of those things are known right now. It's very, very hard to know. So you just have to leave that uncertain. And we'll be learning, I think, over the course of the next intermeeting period, much more about that. And the same is true for the others. I don't know if you mentioned shutdown. I think of all of these as being on the list. We don't comment on that. It hasn't traditionally had much of a macroeconomic effect. Energy prices being higher, that is a significant thing. Energy prices being up can affect spending. It can affect over time. A sustained period of higher energy prices can affect consumer expectations about inflation. We tend to look through short-term volatility and look at core inflation. But so the question is, how long are higher prices sustained? We have to take those macroeconomic effects into account as well. Those are some of mine. I'm not sure if I hit them all, but ultimately, you're coming into this with an economy that appears to have significant momentum, and that's what we start with. But we do have this collection of risks that you mentioned.
Craig Torres from Bloomberg News. I was a little surprised, Chair Powell, to hear you say that a soft landing is not a primary objective. This economy is seeing added supply in a way that could create long-term inflation stability. We have prime-age labor force participation moving up, where people can add skills. Workers want to work. We have a boom in manufacturing construction. We've had a decent spate of home building. And since inflation's coming down with strong GDP growth, we may have higher productivity. All are which good for the Fed's longer run target of low inflation. And if we lose that in a recession, aren't we opting for the awful hysteresis that we had in 2010? So are you taking this into account as you pursue policy? Thank you.
To begin, a soft landing is a primary objective, and I did not say otherwise. Okay. All right. I mean, that's what we've been trying to achieve for all this time. The real point, though, is the worst thing we can do is to fail to restore price stability, because the record is clear on that. If you don't restore price stability, inflation comes back, and you go through, you can have a long period where the economy is just very uncertain, and it'll affect growth. It'll affect all kinds of things. It can be a miserable period to have inflation constantly coming back and the Fed coming in and having to tighten again and again. So the best thing we can do for everyone, we believe, is to restore price stability. I think now, today, we actually, we have the ability to be careful at this point and move carefully, and that's what we're planning to do. So we fully appreciate the benefits of being able to continue what we see already, which is rebalancing in the labor market and inflation coming down without seeing a large increase in unemployment, which has been typical of other tightening cycles. So
let's go to Chris.
Hi, thank you. Chris Rugaber at Associated Press. When you look at the disinflation that has taken place so far, do you see it mostly as a result of what some economists are calling the low-hanging fruit, such as the unwinding of supply chain snarls and other pandemic disruptions, or is it more a broad disinflationary trend that involves most goods and services across the economy? Thank you.
So if I understood your question, I would say it this way. I think we knew from before when we lifted off, but certainly by the time we knew that bringing inflation back down was going to take, as I call it, the unwinding of these distortions to both supply and demand that happened because of the pandemic and the response. So that unwinding was going to be important. In addition, monetary policy was going to help. It was going to help supply side heal by cooling demand off, and just in general, better aligning supply with demand. So those two forces were always going to be important. I think it's very hard to pull them apart. They work together. I do think both of them are at work now, and I think they're at work in a way that shows you the progress that we are seeing.
Let's go to Mike.
Michael McKee from Bloomberg Television and Radio. In June, you forecast a 5.6% year-end median Fed funds rate, and since then, you've more than doubled your growth forecast. You lowered your unemployment forecast significantly. So what would justify that last move? Because the median forecast is for lower inflation. And given all the known unknowns that you face, how much confidence do you have, can investors have, or the American people have in your forecasts?
Well, forecasts are highly uncertain. Forecasting is very difficult. Forecasters are a humble lot with much to be humble about. But to get to your question, though, what's happened is growth has come in stronger, right? Stronger than expected, and that's required higher rates. Unemployment, you also see that the ultimate unemployment rate is not as high, but that's really because of what we've been seeing in the labor market. We've seen more and more progress in the labor market without seeing significantly higher unemployment. So we're continuing that trend. In terms of inflation, you are seeing the last three readings are very, very good readings. It's only three readings. We were well aware that we need to see more than three readings. But if you look at June, July, and August, you're looking at really significant declines in core inflation, largely in the goods sector, also to some extent in housing services, and just a little in non-housing services. Those are the three buckets. Headline inflation, of course, has come way down, largely due to lower energy prices, some of which is now reversing. So I think people should know that economic forecasting is very difficult, and these are highly uncertain forecasts. But these are our forecasts. We have very high quality people working on these forecasts, and I think they stand up well against other forecasters. But just the nature of the business is the economy is very difficult to forecast.
Given the forecast that you have, what justified not moving today, and what could justify moving in the future if you think inflation is coming down? In other words, why did you leave that extra dot in?
Well, I think we have come very far, very fast in the rate increases that we've made. And I think it was important at the beginning that we moved quickly, and we did. And I think as we get closer to the rate that we think, the stance of monetary policy that we think is appropriate to bring inflation down to 2% over time, the risks become more two-sided. And the risk of over-tightening and the risk of under-tightening becomes more equal. And I think the natural common sense thing to do is as you approach that, you move a little more slowly as you get closer to it. And that's what we're doing. So we're taking advantage of the fact that we have moved quickly to move a little more carefully now as we sort of find our way to the right level of restriction that we need to get inflation back down to 2%.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With your focus on year-over-year PCE, isn't it true that base effects are huge, and that by the time you meet in November, that it's more likely that you'll have a low PCE number that would make you feel more comfortable? And secondly, how will the lack of key indicators like CPI, the jobs report, impact your approach in upcoming meetings if we were to have a government shutdown? Thank you.
Yeah, I missed the first question. What was what factors?
The base factors.
Base factors. Okay. So on that, we're looking at just monthly, right? You can look at just monthly readings and see what the increase was from the prior month. So you're right. When you go back 3, 6, and 12 months, you get base factors, but we can adjust for that. In terms of not getting data, again, we don't comment on government shutdowns. It's possible if there is a government shutdown and it lasts through the next meeting, then it's possible we wouldn't be getting some of the data that we would ordinarily get, and we would just have to deal with that. And I don't know. It's hard for me to say in advance how that would affect that meeting. It would depend on all kinds of factors that I don't know about now, but it's certainly a reality that's a possibility.
But would you feel more comfortable on the base effects that as those kind of fall out of the equation for the next couple of readings by November, would you feel more comfortable at that point?
Yes. I mean, if you're looking, if we can tell how much inflation has gone up in a given month, right? And that's what we're looking at. And month by month, what's the reading? And I think what we're really looking at is there's a tendency to look at shorter and shorter maturities, but they're incredibly volatile and they can be misleading. That's why we look at 12-month. But I think in this situation where it looks like we've had a bit of a turn in inflation starting in June, we're also looking at 6 months and even 3 months, but really 6 months inflation. So you're looking at it over that period and over longer periods. That's the right way to go. And we don't need to be in a hurry in getting to a conclusion about what to do. We can let the data evolve.
Thanks for the question, Chair Powell. Edward Lawrence with Fox Business. So I want to focus back in on oil prices. We're seeing oil prices, as you mentioned, move up, and that's pushing the price of gas. So how does that factor into your decision to raise rates or not? Because the last 2 inflation reports, PCE and CPI, we've seen the overall inflation has actually risen.
Right. So, energy prices are very important for the consumer. This can affect consumer spending. It certainly can affect consumer sentiment. I mean, gas prices are one of the big things that affects consumer sentiment. It really comes down to how persistent, how sustained these energy prices are. The reason why we look at core inflation, which excludes food and energy, is that energy goes up and down like that, and it doesn't. Energy prices mostly don't contain much of a signal about how tight the economy is, and hence don't tell you much about where inflation's really going. However, we're well aware, though, that if energy prices increase and stay high, that'll have an effect on spending, and it may have an effect on consumer expectations of inflation and things like that. That's just things we have to monitor. So.
On the consumer, they're putting more and more of this on their credit card. The consumer seeing record credit spending. How long do you think the consumer can manage that debt at higher interest rates now? And are you concerned about a debt bubble related to that?
So to finish my prior thought, I was saying that's why we tend to look through energy moves that we can see as short-term volatility. Turning to consumer credit, of course, we watch that carefully. Consumer distress, measures of distress among consumers were at historic lows quite recently, during and after the pandemic. They're now moving back up to normal. We're watching that carefully. But at this point, these readings they're not at troublingly high levels. They're just kind of moving back up to what was typical in the pre-pandemic era.
Hi, Jean Young with M&I Market News. Yields along the Treasury curve have risen to their highest in years. What is the Fed's view about what's been driving that increase in recent weeks, and how much of it can be attributed to macro explanations and how much to technical factors?
So you're right. Rates have moved up significantly. I think it's always hard to say precisely, but most people do a common decomposition of the increase, and the view will be it's not mostly about inflation expectations. It's mostly about other things, either term premium or real yields, and it's hard to be precise about this. Of course, everyone's got models that'll give you a very precise answer, but give you different answers. So, but essentially, they're moving up because it's not because of inflation. It's because it'll probably have something to do with stronger growth. I would say more supply of treasuries. The common explanations that you hear in the markets kind of make sense.
Kyle Campbell, American Banker. Thank you for taking the questions. Just two on housing. You've said slower shelter cost growth is in the pipeline and will reflect in inflation readings as new leases are signed. But there's also some questions out there about the way housing costs are measured, particularly the use of rental equivalents, which are estimates from homeowners about what their homes would rent for if they were in the rental market. So my question is, how much of the effort to tame inflation, both as it's measured and felt by the broader public, hinges on housing supply? And then as far as a constrained housing supply being sort of exacerbated by this sort of lock-in effect of mortgages being higher now than they were at their recent historic lows, how is that going to impact future thinking about taking interest rates to that lower bound in the future?
So on the supply point, of course, supply is very important over time in setting house prices and for that matter, rents. And supply is kind of structurally constrained. But in terms of where inflation's going in the near term, though, as you obviously know, a lot of it is leases that are running off and then being re-signed or released at a level that's it won't be that much higher. A year ago it would have been much higher than it was a year before. Now it may be below or at the same level. So as those leases are rolling over, we're seeing what we expect, which is measured housing services inflation coming down. Your second question was the lock-ins. How much is that affecting things, really?
Is that going to affect your decisions to potentially bring rates down to their lower bound in the future, sort of creating that sort of bubble of buying and then a lock-in that sort of stagnates the housing market?
I think we look at I would look at the lock-in, the idea being that people are in very low rate mortgages, and even if they want to move now, it would be hard because the new mortgage would be so expensive, and that's explaining that's one of the explanations for what's happening broadly in the labor market. Would that play a role in our future decisions in a future loosening cycle about whether we would cut rates? No, I don't think it would. I mean, I don't think that's. I think we'd be looking at what fundamentally what rates does the economy need, and in an emergency like the pandemic or during the global financial crisis, you have to cut rates to the point that you have to do what you can to support the economy. So I wouldn't think that would be a reason for us not to do that. It's not something we're thinking about at all right now, but down the road I wouldn't think so.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, you've mentioned several things that would possibly weigh on consumer confidence, maybe cut back consumer spending, possible government shutdown, high gas prices. At this point, would the Fed welcome a decrease in consumer spending? Would that help you get inflation closer to your 2% target?
I wouldn't say it that way. We're not looking for a decrease in consumer spending. It's a good thing that the economy is strong. It's a good thing that the economy has been able to hold up under the tightening that we've done. It's a good thing that the labor market's strong. The only concern, and it just means this: if the economy comes in stronger than expected, that just means we'll have to do more in terms of monetary policy to get back to 2%, because we will get back to 2%. Does that answer your question?
Yeah, and I guess on the other hand, would you worry that that could contribute to an economic slowdown or even a recession?
Well, that's always a concern. I mean, concern number one is restoring price stability, because in the long run, that's something we have to do so that we can have the kind of economy we really want, which is one with sustained period of tight labor market conditions that benefit all, as I've said a couple times. So that said, of course, we also now, given how far we've come, with our rate hikes and how quickly we've come here, we do have the ability to be careful as we move forward because of that consideration.
Thank you, Chair Powell. Simon Rubinovich with The Economist. One of the factors in the economic resilience to date appears to be a lesser degree of rate sensitivity than in the past. Obviously, we've talked about households with long fixed-rate mortgages, also companies that refinanced before last year. What is your thinking about the efficacy of rates and how that's changed? And then related to that, how do you think about the distributional consequences in the sense that if you're a relatively wealthy household with a long fixed-rate mortgage, the past year has not been all that tough with rates going up, whereas if you're relying on your credit card for supporting your consumption, in fact, times are getting a lot tougher, a lot more quickly. Thanks.
So I guess it's fair to say that the economy has been stronger than many expected, given what's been happening with interest rates. Why is that? Many candidate explanations, possibly a number of them make sense. One is just that household balance sheets and business balance sheets have been stronger than we had understood, and so that spending is held up and that kind of thing. We're not sure about that. The savings rate for consumers has come down a lot. The question is whether that's sustainable. It could just mean that the date of effect is later. It could also be that for other reasons, the neutral rate of interest is higher for various reasons. We don't know that. It could also just be that policy hasn't been restrictive enough for long enough. And there are many candidate explanations. We have to, in all this uncertainty, make policy. And I feel like what we have right now is what's still a very strong labor market, but that's coming back into balance. We were making progress on inflation. Growth is strong, but I think by many forecasts, many forecasts call for growth to moderate over the course of the next year. So that's where we are, and we have to deal with what comes. On your second question your second question was distributional, but can you be a little clearer about that?
Yeah, my point there was that if you're somebody who has a long fixed-rate mortgage, you've been able to endure the higher rates relatively easily. If you're somebody who's living month to month off of your credit card, current financing rates are punitive.
Yes, and so the point I would make there is that we're trying to get inflation back down. The people who are most hurt by inflation are the people who are on a fixed income. If you're a person who spends all of your income, you don't really have any meaningful savings. You spend all your income on the basics of life: clothing, food, transportation, heating, the basics. And prices go up by 5%, 6%, 7%. You're in trouble right away. Whereas even middle-class people have some savings and some ability to absorb that. So it is for those people, as much as for anybody, that we need to restore price stability. And we want to do it as quickly as possible. Obviously, we would like to do that. We'd like the current trend to continue, which is that we're making progress without seeing the kind of increase in unemployment that we've seen in past things. But you're right, though. When we raise rates, people who are living on credit cards and borrowing are going to feel that more. They are, and of course, people with lots of savings also have a much lower marginal propensity to consume, and so they're not going to. It's not going to affect them as much.
Let's go to Greg Robb for the last question.
Thank you, Chair Powell. Greg Robb from MarketWatch. In the Beige Book recently, you can tell that the Fed has been surveying nonprofits and community groups about the economic health of low-income Americans, moderate-growth Americans. I have two questions about this. Are you going to use that data to maybe come up with sort of like a quarterly survey of those groups, like the Senior Loan Officer Survey? And and also the second question is, from your recent readings of these surveys, how are low and moderate Americans doing? Is there this thing where like the GDP is strong because of wealthy Americans kind of driving things? I just want to get your sense of the health of that sector. Thank you.
So I don't know about the quarterly survey. That's an idea we can take away and think about. In terms of how low and moderate Americans, they're clearly we're suffering from high inflation. I think during the pandemic, the government transfers that happened were very meaningful. And if you know, the surveys that we take showed that low and moderate income people were actually in very, very strong financial condition. I think now it's a very hot labor market, and you're seeing high nominal wages, and you're starting to see real wages are now positive by most measures. So I think overall households are in good shape. Surveys are a different thing. So surveys are showing dissatisfaction. And I think a lot of that is just people hate inflation, hate it. And that causes people to say the economy is terrible, but at the same time, they're spending money. Their behavior is not exactly what you would expect from the surveys. That's kind of a guess at what the answer might be. But I think there's a lot of good things happening on household balance sheets, and certainly in the labor market and with wages. The biggest wage increases having gone to relatively low-wage jobs. And now inflation coming down, you're seeing real wages, which is a good thing. Thanks very much.
Markets, headlines,
and that just suddenly came to a very quick end. Had to jump out of that quick before the music would come in. Anyway, so now we get the reaction. Now we get the bounce back. During that, I was taking lots of trades, lots of investments. What did you do? We'll discuss that now. Right, here comes a little bounce. Look, starting to come up again. So what did you do? First of all, for me, that was as planned. It was a pause. Sensei described it as a skip. I don't agree. It's politics, it's games, it's the little dance that goes on with the Fed and the whole system. It's definitely a pause. And this talk about future rate hikes, I don't think is true. I don't think we're going to get that. I think holding the pause there is fine. It will be restrictive enough. It'll give confidence to companies like our Virgin Galactic and companies with borrowing. It will make things more restrictive, but they know, and I believe, that we're not going to get rate hikes. We're going to stay here now, and this is good. So during that, what did you do? What did you make of it? First of all, let's go over to our poll and see how many of you were right. So for me, it's good. It's good to know where we stand. We know we're getting 4.9% on APY, uninvested cash. So you couldn't hear me then for a second. You can hear me now, right? Was that when I was... You can hear me now. Okay. All right. Sorry, I was muted then. I mute myself for when they're speaking to make sure everything sounds good. Sorry, I was talking about the poll on X, how many people voted. That's all I was saying. You didn't miss anything. But anyway, thank you for letting me know. We're back again now. All right. So there you go. I mute it when I'm listening in so we don't get any background noise. Anyway, so for me, I'm happy. Now, what did I do during that? I was able then to take some profits and able to reinvest, and I did. And I am now getting into more Berkshire Hathaway stock. So that's what I did. I bought, and I'm going to show you what I did. So during that, we're down, but I wouldn't be surprised if we're up by tomorrow. What did I buy? Virgin Galactic, no, I've got plenty there. I'm not putting any more risk there, managing that risk. Berkshire Hathaway, I was dropping $100 bills all the way down. Every step, I bought another $100. and I've got now $547 in Berkshire Hathaway. It's down today, 0.77. I'm only down 0.1. So you can see by dollar cost averaging all the way down, I should be actually in the green in a few moments with Berkshire Hathaway. I wouldn't be surprised. Roth IRA, I bought twice on the way down, 100, then 100. I'm down just by 0.12. So I've got my money back there if I want to get it out, no problem at all. I've got a scalp position now on my Roth IRA. So if I ever need any cash, I can get it out at any point from my Roth, because it tends to trend up all the time. So it's like a safe stock to have very good growth plus access to the funds. I can get it out. So I wouldn't be surprised if I'll be in the green there in a few moments. And I'm only down 0.15 on it at the moment. Considering we're down 0.8 today, I'm only down 0.1. So that's the benefit of dollar cost averaging on that stock. All right, so that's what I'm doing. Okay. Let's have a look. We can hear you now. Sound. They literally said it was a skip, but it's Martyn's World. They started the presentation by saying it's a pause. It didn't say a skip was when we don't make a decision. I didn't hear that. I didn't hear the words, we're not undecided. They decided to leave the rates alone. That is very different than a skip. Anyway, they literally said it was a skip, but Martyn's World, it's a pause. I like my world. My world's better. I live in my own bubble. My brother says that. Martyn, when are you going to come out of your bubble and live in the real world? I like my world. My world's great. I like it in here. So if I say it's a bloody pause, it's a bloody pause, all right? We can now. Hello and good evening, everybody. Yes, that's better. Now you were muted. Now you were muted after that. It was when you went on Twitter poll. Yes, that's right. Hey, Alex. I can hear. Yeah, I can hear you loud and clear. All good now. There you go. I have no profits. How can you have no profits? As soon as you switched over, all good. Hey, what's up, Sensei? Hey, Mike. Now, obviously, folks, we didn't do the closing bell. There was no point. That was a very long FOMC report. Normally, we go over to the last part of the closing bell show. I cancelled it, so we're keeping with this one. This one will end and go to the opening bell in the morning. So there's no closing bell. This is the closing bell. All right. BRK now owns more than 80% of Pilot truck stops. He knows something. Mr. Bogues. Fantastic. I'm buying more Berkshire Hathaway. Every time I can get a discount on it, I'm going to dump $100 on it. If it's a discount, I'm buying $100 to lower that average. And one day, you never know, I'll own one share. How do you pull profit without taking a penalty in Roth? Because the Roth, no, hang on, let's be clear. In your Roth, you can buy and sell stocks all day long. You just can't take the money out. This is where people get confused. You can buy and sell as many times as you like in your Roth IRA. You could end up with millions of dollars. You just don't take the profits out. You can sell and have the cash sitting there. You just can't take it out and put it in your bank. That's basically all you're doing. But you can trade. You can put in $7,000 a year and have $1 million Roth IRA account. Trade in it. That's your money. You just can't take it home to the bank. But you can sell and have it sitting there in cash. No problem at all. That's how it works. I was bitching the whole time. Is what I did. Sorry, Mike doesn't like it. He doesn't like when Jerome Powell speaks. That's all right. Don't you worry about that, mate. Anyway, we're down at the moment. What's happening now? Safety shot. This is Mr. Bogue. I'm flat right now. We were making money on it today. It was going up nicely. At one point, I was up about 5-6%, which is not bad in the first day. I've only bought a few. I haven't done the research yet on the money. So anyway, charge point going down at the moment. Virgin Galactic. It's got to go down to 150 before I buy any more. Oh, okay. Doe. Hello. Should have known that. No. Hey, no worries. That's what we're here for, Seth. That's why you remember. That's what it's all about. All right. Berkshire Hathaway now is down 557. I'm at 559,336. Now, because I've been buying 100 every time it dropped, I'm not buying any more. I do want to take it up to about $2,000. I also want to start buying back into the S&P, but we're going to wait now, because now what I need to do is take some profit out of FFIE. Don't want to be in this. I want a small profit. I've got some Rumble profit as well today. Rumble. Let me show you my Rumble. Yeah, there we go. You can see I'm up 4.65% in my Roth. Now, the Roth IRA, I could sell Rumble now for a 4.65%, half of what you make on the S&P in a year. So not bad. I'm not a fan of Rumble from an investment standpoint. I think the expectations when you're betting on Russell Brand and you're betting on Donald Trump and all these things. I don't like anything. That to me is gambling and voting on politics and God knows what else. Don't like it. So I could sell this right now and put some money in cash and then continue building up my Berkshire, because at the end of the day, 4.65 is a profit. But for some reason, something's telling me just to wait a little bit. So I will. Mr. Bogues, Alex April is from Italy. Mr. Bogue is from Arkansas. He's a truck driver, and Paddy is also from Italy. And Mr. Bogue called in this morning, was on the show, and the video will come out later, hopefully today, because at the end of this show now, I will edit it and put it out. So Mr. Bogue, your video will come out today. All right, and also your clip as well, your testimonial. This is actually Paddy April from Italy. This is what she sounds like.
Hello to everybody. I'm calling from Tuscany, near Pisa. I'm very, very happy to be here. It's very amazing. It's very funny. And to share friendship, a great channel, because you're sympathetic, because it's a great family, a pleasure, and a great emotion.
There you go. Yes, Tesla has dropped. It's not cheap enough for me to add at this point, though. And the position that's down so much is my brokerage position. My investments to sell, which is... Rocket Labs is getting close again. Okay. Is getting a few drops now. Yeah, here's the reaction, all right. FFIE. The bounce will come in a minute. I wouldn't be surprised. Give it a few more minutes. A little fun and games will be over. Tesla. Yeah. Going down. Charge point. Virgin Galactic. I'm not doing anything now. I'm going to hold my position and then see where we are tomorrow. Okay. Keep an eye out for Tesla. Thank you very much for mentioning that to me, Buckaroonie. Good tip there. Yeah, keep my eye out on that one. If we get significant drops, then I will sell something, even if it's just a wash. but it's too expensive at the moment. Anyway. All right. Well, we've got 20 minutes to go. We've got day trader of the day. It's been a very long day today. I have to say I'm a little bit tired. It's been a very long day. So while I'm just going through the stocks, let's hear from a few of our investors.
Follow Martyn's The Day Trader. You got to be in it to win it.
Welcome to the Day Trader, Martyn Lucas channel. It's the most fun you can have doing daily trading, making money and having a laugh with a wonderful family. If you're not there, you're missing out. Join the Day Trader channel on YouTube. See you there.
The best that you can have today is to join the Martyn Lucas show. Make yourself some money and have fun with a great group of friends at the same time. Go for it.
Keep watching Martyn Lucas. He's a cheeky chappy from the south of England and he's a lot of fun.
You should definitely join the Day Trader. Join us, join the family. I'm very excited to be part of this family. We're going to make some money together, and Martyn is the most straight up person I've met so far. No chitter chatter. We just get straight to it.
Best YouTube channel in the world. It's great family, great support all round, not just for Martyn's channel, but for every channel that you guys come and watch. So that's why you need to be part of the Day Trader family.
Hi, I'm the Queen of Soft Braiding. I'd like to welcome new members, and if you know you're a YouTuber, come to the Day Trader show to make your YouTube channel grow. I came to the channel when I had under 100 subscribers, and at the moment I'm going towards 400. So you're in the right place. Keep watching and supporting the channel.
Hello to the family and the future family members. Izumaki here. I just wanted to say the Day Trader is one of the most honest, 100% open YouTubers around. Martyn's an honest guy and helps us through all the market ups and downs. Don't be shy, say hello, and join the family.
Here on Martyn Lucas Day Trading. Great show, great community. Loving the feels from a local man that is now not local, but soon to be probably local again at some point in his life. Just keep it going, keep getting rich, or at least watching your money and holding your money and saving it for the rainy day, which will come one day.
I enjoy this so much. I'm on a lot of teams, and your content and your energy and your music, I love it. So I'm glad to be here. I love your content. I love your music. I love your broadcast. I'm so happy to be here. So
started watching on TikTok, and I was totally against doing stocks, but after watching you for about 5 to 7 days, I dove in, put $1,000 into Robinhood, and gave this a try. I've been watching what you've been doing. I've been following and trading the way that you've been trading. And today I made a profit after yesterday. So big thumbs up. It really was exciting to me. And all day today I've been waiting for the Virgin Galactic to take off and be able to reinvest and get back in, because I did that today with you.
I joined your show because you're honest. I want to learn more, and I don't feel alone, Really enjoy your show.
Yeah, I'm part of the community with Martyn because it's true and it's honest, and everyone's polite, everyone's genuine. It's a great community to join. Everyone's supportive. Everyone has something knowledgeable and wise to share, and I've definitely benefited from this community. So what you're doing is great, Martyn. Thank you.
I like the way you explain people your thinking and the stock. You're really honest and you really tell the way it is. You just try to pump the shares. You're just telling everything the way it looks. You're not trying to make money from the people. You're just giving your best advice. And I've been watching you for a while now, until last week that I decided to enjoy and be a member. And like I said, I just love the way you really, I feel you're honest. And that's the main reason I'm enjoying.
My name is Akil, also known as the Man from Earth, and I'm with the Martyn Lucas family, the investor family, and what we do every day is we go over investing. And the reason why I joined this family is I was looking for some news about Virgin Galactic when the spike went up like last week, and it led me directly to the show, and I started watching. I'm like, wow, this guy, I love the energy in here, and it's great, man. So, I became a member, Actually, I became a sponsor one day last week, a sponsor of the bill, for Poodle Kill Urban Apparel. I'm the CEO and owner of that company, and we love this. Martin Lucas, the Virgin Galactic whole thing. We love it because, the energy in here is great and I love it.
Everybody, you should watch Martyn. He's amazing. He loves to drink whiskey, lay flat on the floor. No, all jokes aside, it's an amazing community. I love watching Martyn, and you should support him. And yeah, send him some super stickers with amazing comments. Thank you.
Just wanted to let everybody know that this is the best YouTube channel in the world. And all the time that we've been here, it's been exciting. We've been part of a great family, had a lot of struggles, but a lot of winnings. So whatever anybody thinks that they need not to join, they need to join because it pays off multiple ways.
Back on August 18th, and I woke up to Martyn singing a song. He advertised that he would do birthdays. My sister's birthday was going to be on that Friday, and he obliged and made a 34-minute video of that birthday party. It was so good, I haven't left the place. I've been here ever since as the place to be. If you want to have fun, make money, enjoy yourself, join the Martyn Lucas Daytime Trader Show. And he sings a song for you. He'll do your birthdays and have a good time with everybody. New members are needed and wanted, and away we go. We have fun.
I'm Kurt Wooker Jr., and I am blessed to have been on The Day Trader. Please subscribe, watch everything. Martyn is being really, really honest with you guys. It's a killer thing. So check him out. You can check me out at CoinGeek.com and GorillaPool.com. It's been a pleasure.
All right, we're getting to the end of the show. That's some of our members. If you're new, that's some of the members. You two, if you're a member, you can call in, be on the show, leave a video or a call just like that. That one at the end was Kurt Wooker, who's a big guy in crypto world. And that's what Mr. Bogues, your video will look like later on today when I put it together. All right, there you go. So... the markets are selling off now. The bounce hasn't come yet. No worries. Just be patient. I'm not worried at all. And it's business as usual. I've got a few stocks I can sell. I've reinvested my money today and buying the Berkshire Hathaway drop. I don't think it will last for much longer. I'm happy with that. I'll be up on that soon, I'm sure. I'm building up a position of $1,000 at first. See where we go. And other things haven't gone low enough for me to buy. I'm just holding them. My averages are low anyway. I want to start getting back into the S&P now. We were at 11.5%. We're now down to 8.72. So we're trimming right back now on the S&P, and that's exactly what I want, to start buying back the S&P, but I'm going to wait until I get it under 400 again, which is what I want to do, and I can start building it up again. I had about $20,000 I managed to build up on the S&P last time, and that's exactly what I'm going to do again this time. So I made about 12%, 13%. We're now down to 8%. So just have patience, wait for my next payday, which is tomorrow on YouTube. But I've already, pretty much earmarked everything. So I don't have any cash suddenly come flying in. But anyway, we shall see how things go. We've got day trader of the day. Steve said the whiskey got you tired. It's been a long day. I've been covering this now all day. So anyway, Bill's the man of the day. He is indeed, isn't he? Is Bill here? Shin Dynasty, are you here, Bill? A lot of love for Bill today. Is he here? No, he's not. He's not in the chat. Bill's not with us right now. It's a very big gesture today. Mike, sorry to complain in the chat, but just don't trust the feds. That you don't need to apologize at all. This is the place where you express your feelings and your views. Always be honest. Don't worry about that. That's absolutely fine. It's part of the family. We all have disagreements. You're not disagreeing with me anyway. You just don't like what the Fed are doing. Nothing wrong with that. What price would you pay for Tesla? Well, I'm already in with Tesla and I'm already up. I'm up 32, nearly 33%. So I've got an average price of 198. I bought a few shares at 110. So it's not what price I would pay, because the stock can go up 4x, and that's why I own it, 4 to 6x. on Tesla. Great investment, no problem at all. However, I am waiting for it to come down before I decide to add more, and we shall see. But anything is a good price for Tesla today, because in 5 years' time we're going to be double, 3 times where we are today. So I'm not concerned about buying it. It just wouldn't be sensible just to load up on it now when I've already got other commitments and things I'm looking at. So it's a good buy at any price around here, in my opinion. But yes, it can go a lot lower. First, Martyn has a big heart. Mohammed, thank you very much. I love what I do. It's the best job in the world. Virgin is so hard to predict. I don't think it is. It's doing exactly what I said it would do. It doesn't surprise me at all. I don't see it as hard to predict. It's a volatile stock, not making any money. The day we just heard that rates are staying the same, and this threat of going up. But I don't think they're going to go up. They're just going to stay where they are. So just a waiting game on space. It's about patience. Yeah. Yesterday down 30. Yeah. IPO rubbish. A lot happened today. I get you on Tesla. Nice one, Chris. Okay, let's do day trader of the day. I am happy. I have lowered my averages. I've got more shares. I've made more trades. I've made more profits. I've starting to invest in Berkshire Hathaway. I've been lowering my averages, bringing the price down. I am happy. Of course, I don't want the stock to go down, but it's supposed to go down on a day when Jerome Powell speaks. All of that pause was priced in. Now people are taking profits, driving it down, buying it back up again. So all you got to do is know how it works. It was fantastic to hear voices from a lot of members of the family. I'm glad you like that, Alex. It's nice from time to time, isn't it? We got a few new ones as well. Now, folks, please, a little thing here. Do you see the pictures? Let me just clear this a minute. Hang on, pressing all the wrong buttons. You see all the pictures around my head? I'm about to replace all the pictures. We're going to renew all of these pictures. So if you've got a mug, you bought a mug from the shop, or you haven't bought one yet, go get yourself a mug, or take a new picture. New members that have bought mugs, I haven't done it. I'm about to replace all the pictures and renew all of this. So we want to make it, because a few members aren't, a few people aren't regular as they were before. So we want to, give other people the chance to get their faces on the screen. So I've got some new pictures. If you do want to get a mug from the shop, I'll give you the link to the shop. Here it is. You can go and take a look, order yourself a mug. If you are going to order a mug, let me know and I will wait to update it. Here is the shop. You can go and get yourself a glass or a mug or an anniversary mug when we hit 2 years. This was the when we hit 1 million views. This was second anniversary mug. There's all sorts of stuff here. There's the white one, the plain white one. There's the black one. I think actually. Am I right in saying that the anniversary mug is still here? Let me have a look. The first anniversary, is it still here? Yes, there it is. There's the first anniversary. It was brought out of being limited. You can buy it now. Some people want to get the whole set. This was the first year anniversary. If you want to get that one, if you missed it, you can get that. There were some new items added as well. People wanted in fact, Zach8 has just ordered the crystal ball t-shirt and fleece as well, I believe. But yeah, this is what he ordered. He ordered the hoodie, the hoodie. It's kind of cool, isn't it? But yeah, if you want to get any of those things, or you want to get yourself a black t-shirt or whatever, there's all kind of different things there. All right. Anyway, I'll give you the link again. So I'm going to do that. I'm going to do that now over the next week or so. If you want to do that, if you want to get one, let me know, and I will add you in. All right, here comes the bounce back on Berkshire Hathaway coming up. I bought all the way down. It's bouncing up quite quickly as well. So it's all about patience, really. I'm down 0.26. Just started buying it. And this is Berkshire Hathaway A class. You can't do limited trading for split funds, but it means it's less volatile, of course, because not everyone can do fractional shares, and not everyone wants to do take a chance on the price. I'm happy to do so because I want to own it long term. Now, I'm not going to sell this unless I need some funds. All right, let's do day trader of the day. Okay, I'm down. I'm just behind Warren Buffett right now, just down. So I'm down 1.19. That will change very quickly. I wouldn't be surprised if I'm up to just down 1 time the bell goes. I'm fine with this. Right. Let's put the clock on. Put the clock up. Let's see who wins today. Now, we've also more cash prizes coming up. I'm about to tell you about that. After day trader of the day, I will tell you about it. Evening Paddy, Jojo, Tesla, starting to climb, guys. Evening Paddy, rumble down, is it? Yeah. Why is there a t-shirt with... Oh. What the... It's a crystal ball, isn't it? It's the crystal ball. It's this. It's the crystal ball. I look into my crystal ball. That's what it is. Got it? All right, now you got it. Up, Switzer is up 0.01, up 0.15. Henrik goes into the lead, down 3.8, down 3%, down 2.6, down 1.99, down 1.03, up 0.23. Jojo S goes into the lead, -1. Loud Work, how are you, Loud Work? What's your buy-in price for Rumble? My buy-in price was 538. Yeah, I'm up nearly 3%. Our winner is Jojo S. Thank you for your honest trade. Give him a thumbs up. Really, really good. Very, very nice indeed. Give him the sound effects. Brilliant. Very, very good indeed. There we go. We did it a little bit early today, before the bell. I don't know why. I just felt like it. In fact, I probably just made a mistake, to be honest. Anyway, whatever. Right, we've got a few minutes, just a couple of seconds to go. We're going to ring the bell. We'll see where it closes, and then we'll be out of here. I'm a little bit tired, but I am going to make the video for our new member today. So look out for that. Mr. Bogues. We had a great interview today, called into the show. It was great. I really enjoyed it. In fact, I will open up the broadcast lounge now. Broadcast lounge is open. If anybody wants to react to the FOMC report, broadcast lounge is open. If you want to call in, you can say hello, say what your thoughts were. We're going to give you a couple of minutes to go. Because we're going to ring the bell and close. But if you want to call in, you can. The broadcast lounge is open, members only. Yeah. Let's have a look. Everything's taking a bit of a drop now. Yeah. Rumble. Proctor. Plug. We're going to get a drop now. People are going to sell and then buy back in again. So it gives you the opportunity to buy back down 440. Yeah, it's not cheap enough yet. It's getting better, but it's not there yet. Not worth me selling things to buy it. If you get tired, just take a break. Take a break. Don't try and push it. Tesla going straight back down again. Bit of scalp trading there. I'll wait. I'm perfectly happy to wait. Perfectly happy to wait. Okay. Congratulations, Jojo, down 5.1. Yeah, good score. Nice, Jojo S. Congratulations, Jojo. Very good. Congratulations. Great. Love it. Rocket Lab at 439. Not cheap enough yet. Jojo, good. Rocket Lab 439. Goodbye. Thanks all. Sad day when plus 2-3 wins. Well, that's okay, isn't it? How low do you think Rocket Labs can go? Not much lower than this. Well, I got it at the bottom, I believe. And I just bought it at, where am I? I bought it yesterday, a few days ago, for $3.93. $3.93. That's where I bought it. Didn't I buy it for $3.60 as well, which I thought was the bottom. Anyway, nice swing trade with PLTR. Nice one, Niels. If you buy it here, says Niels. All right. Okay, let me close the broadcast lounge. No one's coming in, so I'll close that down. Oh, Mr. Bogue's in the broadcast lounge. Mr. Bogue is in the broadcast lounge. Do you know you're in the broadcast lounge? He's unmuted. Let me unmute him here. Mr. Bogues, you're live on the show. How are you this afternoon?
I'm good.
You're good. Oh, you're a bit quiet.
Yeah, hang on one second. I still got the video feed open.
Oh, okay. I'm just waiting. We've got Mr. Bogue who wants to call in. He called in this morning. We had a good conversation. The bell is now gone. Let me ring the bell.
There we go.
All right, the bell has now gone. Mr. Bogue, I can't see you. Are you there?
Yeah, hang on. Let me turn.
I'll come back to you in a minute. Right, so we've just closed. The bell has just gone. We are down, and we will come to Mr. Bogue in a second. Get a last word from our member this morning who joined in. Charge points going down. Virgin Galactic is 192 down. It's just moving up after hours. I'm not buying any more here. Berkshire kept on going down. It's starting to come up in the after hours, but it's flat in the after hours. That's what it's saying, but that looks good. ARM, not until it's $20. PLTR, taking a bit of a drop, down 19% now overall. I'm holding my position. I'm just waiting for Mr. Bogue to come on in. I don't see your camera or anything like that. Anyway, I'll come back to you when you've sorted it. Gold. S&P going down under 400. I'll start buying it again. That's it from me, folks. If we get Mr. Bogue on the camera, I'll bring him into you. Otherwise, I'm going to end the show. I will see you. Oh, hang on. It looks like we got him now. I'll be back in the morning for the opening bell, and one of our members, Mr. Bogue, would like to come on and give his thoughts, I think, to the Fed this afternoon. So let me just nip over there. You got Wi-Fi's getting better. Here it comes. Mr. Bogue, you're live on the show. How are you?
Good. What did you think about today?
I'm happy with it. It's tough. It's business as usual. It's a lot of politics, a lot of game playing, a lot of toing and froing. It's all part of the game. It's what they don't say. It's the body language. I don't see we need to raise rates. I think now we're getting everyone selling off because, people sell off just so they buy back. We're just small retail investors. We don't move the market. However, if you've got billions of shares of a stock, and the sentiment is after an FOMC report to go down, what do? You take profits. You sell, the stock will go down 10, 20%. You'll buy back in the morning along with all your rich mates. And what it does is scares retail investors. They get all freaked out because they can't afford the stock to go down. The rich don't care. They love when it goes down and they just buy it back. I like to say it's an exchange from the impatient to the patient. That's all it is. It's just a game. So I'm happy with it. I've been buying more on the way down. I'm not going anywhere. I'll continue to add. What's your thoughts on it?
As long as they didn't raise the rate, I'm kind of happy. I'm not saying I'm happy about the current situation, but I think as long as we just stay steady, slow and steady wins the race. A lot of the stocks that I'm involved with are stocks that need time, or
stability.
So you're right. So you can't rush things. A lot of people expect to just rocket up to the moon overnight.
Nope.
Doesn't always happen. Crypto is something that I've always been in. I own a lot of Shiba Inu. I don't know if you guys are into that.
You would love to meet Sensei Crypto. You've not met him yet. Sensei Crypto runs our crypto challenge. I'm on the $1,000 to $10,000 challenge, and we have others on $7,000 to $100,000 challenge. Sensei studies crypto all day, every day. He has friends at all the projects, and he will call into the show from time to time, do charts with me, full analysis with me. And what he does, he has a challenge, and he tells me what crypto to buy, at what price, when to buy. And not just me, all the members on his premium service. It's fantastic. I put $1,000 into my crypto challenge, and I'm up to 1,200, even though everything's been going down. I'm up 20%. It's showing actually I've got 1,700 because I had an extra 500 on top of that. But what I like about what he's doing is we're not trying to promote videos and sell you can get rich tomorrow and all this rubbish. We're studying it, and he has friends and contacts with the different projects. So yeah, absolutely. We are in crypto, and we are studying it a lot. And yeah, we're on that. You might like to meet Sensei at some point. He's in the chat very often, calls in from time to time. I've got to wrap up the show. So what do you think tomorrow then? After the Fed report, what do you do? Did you sell it? Did you sell? Did you get fearful, or you just held, wait for tomorrow?
I don't sell.
You don't sell.
I don't sell. Not. I mean, my stock's too valuable for me to sell. But there are
Very
times
sensible.
where I buy stuff, and when I need, like you said earlier, when I need some cash, like buying that Berkshire, I do that. I buy crypto all the time, and when it goes up a little bit, I'll sell a little bit. But I have a lot of crypto staked, so it's earning and growing.
Yeah.
So I don't ever touch that. That's just
Yeah.
I'm hoping later to kind of live off that. But
yeah. We like we like XRP here. XRP, Bitcoin. I've got my USDC earning 5%. It's just free money earning 5%. But yeah, I'd love to talk to you more about crypto at some point, then learn what you have, and we can have a conversation with Sensei as well. We can compare charts and analysis and ideas. That'd be great. I'm actually looking at, my members have been asking me for a while privately on different messages. They want me to have my own crypto coin so they can invest in the channel. And you may remember the famous incident. I think it was a guy called Raoul Paul, I think it was, a big YouTuber, who promoted his coin. Obviously, he created the coin, the token, and then dumped it. Everyone lost a lot of money. And I want to do the very opposite. I want to create a crypto token or a coin, whichever, and have a set number of coins or tokens available. That's it. And make a video pledge to the world that I will never release anymore. I will never sell mine and whatever. Because I would love, it's a way for everyone to have a share in this show. And as our show grows, we should be at 100,000 within 2 years, and in 3 years, 4 years, at 1 million subscribers. The value of my token will go up. Everybody will make money, and I will make that pledge that I will never create more, never add more to the circulation, and never sell mine, as an opportunity for everyone to feel part of the growth. As I work and build my channel, everyone's token will be worth more, and it'll be a bit of fun, right? We'll all have a little Luca coin or something like that, but it'd be quite fun.
Right? Yeah, you want to get a coin that is going to be proof of stake. You want to be on a blockchain that's proof of stake, and then you also want to make sure it's deflationary, so it'll continue to grow, not like per se Dogecoin, for instance. It just continues to You know,
Yeah.
it just keeps growing and growing, which is fine. It's really fine because a coin like Dogecoin will be more of a currency coin, but at the end, and it will be more like a stable coin eventually. It'll probably get to $1 and just stay there. But coin like Shiba Inu is kind of more like Bitcoin, where you know there's only a limited supply. I know the supply on Shiba Inu is massive, and a lot of people can't get their minds around it, but it was designed that way because they made a big mistake with BTC, and they're not making that same mistake again. Utility is super important. Being proof of stake is important, and then also fast transaction fees and stuff like that is fast transactions and lower fees is super important.
I've got to cut you off in a second because I've got to get to make your video tonight. If I don't do it today, I won't have time to do it tomorrow. You are being asked a question. Jojo S., one of my long-term members who's got a yellow badge now, he's been a member for a long time. Mr. Bogues, what's your Nikola average? What's your average price on Nikola? I lost money on that stock and not going there again. What's your average? If you want to share, you don't have to.
I've got a lot of Nikola. I have my average on about 70,000 shares is like low twos.
Okay.
And then I have some more shares, maybe about 20,000 shares in the between $11 and $19.
Okay. All right. Thanks ever so much for sharing.
So It's all about where your stock's going to be in the future. You can go back to my hundreds of thousands of posts that I posted on StockTwits and wherever else.
Oh, you're on StockTwits, are you? I'm on there.
Yeah, I've constantly said that Nikola is a minimum 10-year hold. So if you're not planning on, if you're not planning on holding that long, then probably it's not the stock for you if you just want to trade, but a lot of people are making money shorting and trading, day trading Nikola. That's what the market's all about. But I choose not to do that. I could easily make lots of money on that, but I don't. I just have it in me to just keep it and hold it.
Thanks for calling in. Welcome to call anytime. Don't forget the Friday phone in. The Friday phone in, because you can be on with other members and everyone's discussing together. It's a good show on Friday. Anyway, I've got to let you go. Thanks
Great
for
show, man.
You're welcome. It was a lot of fun. I'll see you back in the morning. Bye-bye for now.
All right, bye-bye.
There we go. There's Mr. Bogues. Became a member today of the channel, and it's lovely to have him calling in. I love this. He joined today, and he's straight in. I want to be part of it. I want to call in. I want to share my ideas. That's what this channel is all about. Everyone gets a voice. Everyone can share their information. I don't want to live that long, says Jojo S. I ain't got time to wait for that. I need my money tomorrow. I ain't got time for that. All right, that's it from me. We're over time. I've got to go. Thanks ever so much, everyone. It's been an incredible day. I'm sad that Bill is not here. Bill today gave, I think it was somewhere in the region of maybe 50 memberships away. Bought 50 memberships. It must be. He was buying batches of 10, and I think he did it 5 times. So that's an investment for him of about $150. And many people then became members. Absolutely wonderful. Anyway, Rob says, Martyn, do you remember Barings Bank? I met the guy who lost them 800 million and collapsed the bank. Interesting fella. Hey, get him to phone in. What a phone call that would be. All right, I've got to go. We've done Day Trader of the Day. Let's roll the credits. Hey, Mr. Niels, let's not do what we did earlier. All right? Okay, I've got to get out of here. I'm tired. I've got to make some videos, get my shirt, get my shirt off, get my tie off, and relax a little bit. I don't mind telling you, I'm a bit tired. It's been a long, long day. Right, that's it from me. I will see you back later for the premiere, when it premieres for Mr. Bogues' interview. That was a lot of fun. And don't forget, on Friday, we have the Friday phone-in. Seth Houston just did a super chat. That's very kind of you. I appreciate that a lot. Very nice indeed, a super chat. Yay! Thank you very much indeed for that super chat. Thanks ever so much. Every dollar really makes a huge difference to me. It really, really helps the channel. Everything I earn goes into the channel. Bye, Martyn, everyone. Let's have a great evening and night. Now, for those of you who are new today, we've got the Friday. Here it is.
That's all, folks.
That's all, folks. I like it. That's all, folks. Brilliant. Here is the link. Get yourself a ticket for the Friday night is music night. There it is. I'll give it you 3 times. Make sure you click on that and you'll come to Friday night is music night. Smash a like. Click this button here. Notify yourself. You'll be live on the show on Friday. You can phone in and make live requests on the Friday music night. Friday phone in. Friday music night. You know what I'm saying. Anyway, I'm going to get out of here. I'm tired. Let's roll the credits. Roll the credits. Did we get any credits today? Well, we'll have Seth. Have a great afternoon. Let's roll the credits. Hang on. Where are the credits? Hang on. It's broken. This is Neil's fault. My credits aren't rolling. Hang on, what's going on here? Duplicate page. I'm gonna roll the credits. I'm telling you that for nothing. Hang on. New tab to the right. We're not gonna get it out. We're not gonna get it. Credits. I can't get the credits to roll. It's not loading. It's gotta load. People have paid money. It's gotta roll. Roll the credits. We're going to roll the damn bloody credits, I'm telling you. It's Neil's fault. That's what I meant with the credits. Yeah, but it's broken. It's because I did all that nonsense earlier. It's your bloody fault. I'm trying to roll the credits. I'm just sitting here waiting. I'm just waiting. If it doesn't roll by the end of the song, there ain't nothing I can do about it. Nothing. It's too much. Yeah, it's too much. It's your fault. Alright, I'm going to say goodbye to everybody on TikTok. Maybe that's the problem. See you later, TikTokers. See you back tomorrow morning. Bye-bye for now. Alright, it might be their fault. It won't load. I can't get it to load. As soon as I get home, it's getting fired up. Oh, hang on. It won't load. It ain't gonna work. That's it. Bloody damn credits. Roll. It's too much. As soon as I get home, it's getting fired up. Cool. That's it. I'm buggered. I can't do nothing about it. It's broken. Bust. That's it. Imagine the credits are here. It would say something like, it won't roll. I am refreshing the screen over and over a bloody again. And it won't do it. I'll try it on a different window. No. It ain't gonna work. Well, that's the worst end to the show, isn't it? That's got to be the worst end in the history of the world. Nothing I can do. So that's it. Nothing I can do. It ain't gonna work. All right. I'm pressing all the buttons. That's it. The music's cut. Replay the notification. I can't even do that. Is it? It's bloody plugged in. Right. I'm out of here. I'll see you back later. Have a wonderful evening. Look out for Mr. Bogue. Oh, bloody hell. See you later. Bye-bye. Ta-ra. What a bloody...